of the Fed to say, look, is this inflation story materializing enough to actually get them to make a change? So our mid-year report is still glass half full, still bullish in terms of the equity side of the ledger, but we think there is a risk to transmission if we see let's call it a lack of dialogue between Fed markets really starting today.
Eric, people are expecting a bring forward of the potential first rate hike and to 2023 from 2024. They're looking at the dots, the projections from individual Fed members as to when they see rates starting to rise. If there is a pull forward to 2023, what does that mean in terms of when tapering will start and what it will look like both in composition and the amount that it comes down before raising rates?
Lisa, we think really the word to summarize is incrementalism. And I think the Fed has an opportunity through both the dot plot, but also even through more technical things like the interest rate on excess reserves, as well as reverse repo. There are things the Fed can do to signify even more incremental change than views on tapering or even dot plots. So we think that glide path towards action could start with reverse repo, could start with interest rate on excess reserves, and then probably follow with taper, but the dot plot will be front and center. That really won't change our allocation decisions, Lisa. We still think owning short duration carry makes a lot of sense for bondholders right now. But again, a sea change in that dot plot could cause us to scratch our heads a bit relative to what we think is going to happen.
You know, Eric, Lisa points out in her opinion column today that Fitch has just cut its expectations for bankruptcies, high yield default, I should say, to 1% by year end. Junk rated companies are paying the lowest ever rates. And this has all been propped up by the Fed's really loose policy. And as Mohamed El-Erian writes in his column, the outcomes-based framework. If they change that, does it risk upsetting the apple cart of high yield bonds, of low rates, of companies that have been able to get away with the borrowing they have because of small payments?
A very thoughtful perspective from both Mohamed and Lisa on the topic. If you look at the, let's call it the distress cycle, Matt, it just has been delayed to a point where fund managers are even looking at SPACs as a source of distress because high yield is just not moving right now. So we do think that there is a lag to the credit cycle that's likely inherent in what the Fed is doing. We still think that the credit cycle is kicked off by higher interest rates as opposed to massive economic deterioration. So we think that there is that sort of gradual glide path again. Probably a phrase I'm using too much, but that's something that we think is really inherent in what the Fed is doing. So again, we think that the true distress cycle is probably pushed out another 18 to 24 months, unless we see a significant change in Fed rhetoric. That can obviously change as well, but to your point, that delayed cycle is certainly a function of what the Fed's doing right now.
Can you own or acquire growth right now? Do you have to stay within the consensus view of value?
Tom, we think that there's really two ways of approaching growth right now. One is this reopening trade. We've been playing it through mid-cap U.S. equities. That's been one of our favorite places to be. But we still think that over time, the two growth areas of the broad economy, so 5, 7, 10 years, are healthcare because of demographics and tech because of productivity. So we've been using opportunities in both, weakness in both to get more involved. But I still think this Horizon 1 growth trade is really market cap as well as energy banks, consumer cyclicals. That's the place to be. We still think, though, that technology and healthcare are where you want to be over the cycle.
Eric Friedman, thank you so much. Greatly appreciate it. With the U.S. Bank this morning here on the mid-course correction, really diving into that here, coming near the entry of June as well. Lisa, I look where oil is, and it's 74.08. I'm sort of surprised there isn't a greater uproar about the pricing.
Yeah, not only that, but there's an expectation among oil traders, the top ones, that oil very well is heading back to $100 a barrel, which could be more disruptive than currently what we're seeing. What you quoted was Brent. What I'm seeing on the WTI print is $72.15. But Tom, at a certain point, how much does this bleed into consumers' reluctance, frankly, to spend more? Because remember, when they spend more at the pump, typically that does bleed through to less spent on discretionary expenditures.
We will have to see as well. Let me do a data check right now. Red and green on the screen. Futures flat. NASDAQ gives me a little lift, opposite of what we really saw yesterday. The VIX was a 15 level. And very importantly, with a bit of the tension here, the VIX has widened out to 17.23. For those of you of Global Wall Street, a big deal. BitDog at 40,000. Only reason Matt Miller's with us. He's probably going to buy a new motorcycle this weekend as well. The yield, 149. Out to a 150. Certainly we'll be watching that at 130 when we begin our Federal Reserve coverage. Jan Hatzius with Goldman Sachs with us here in a bit. Stay with us through the morning from Lake Geneva and the Villa Lagrange, where Putin will meet Biden. Our Maria Tadeo is there, along with our White House team as well. Stay with us from Berlin, from New York. This is Bloomberg. Good morning.
With the first word news, I'm Ritika Gupta. President Biden plans to issue a warning to Russia's President Vladimir Putin at today's meeting in Geneva. According to the White House, he'll tell Putin that the U.S. will respond to actions that conflict with its national interests. The U.S. doesn't expect any concrete announcements. President Biden wants to use the meeting to lay out the circumstances in which the U.S. would retaliate and also find areas to cooperate. Israeli warplanes attacked sites belonging to the ruling Hamas movement in the Gaza Strip early today. That came after incendiary balloons launched from Gaza set fires in southern Israel. They're the first attacks ordered since Israel's new government took power Sunday, and they're the first since an 11-day conflict last month ended in a truce. Bloomberg's learned that the European Central Bank is expected to extend bank capital relief by 9 months. That would ensure lenders keep supplying credit to the economy. It highlights the euro area's stronger reliance on bank loans rather than capital markets as a source of corporate financing. The White House said no deadline has been set for bipartisan talks on a compromise infrastructure package. Still, House Democrats are growing impatient. They say they're ready to move ahead without Republicans if there's no deal by the end of next week. Meanwhile, a bipartisan group on the Senate is still trying to reach a compromise. And Google has won a deal to provide French luxury goods giant LVMH with cloud-based artificial intelligence solutions. The aim is to personalize experiences for customers and foster long-term growth. Google also will work with LVMH's individual brands to help them better recommend targeted products to clients. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Will rise again.
Broadway's returning June.
Have you bought tickets?
He's busted out.
You've got more time here.
Commodities are up.
Keep going.
To the moon.
No.
Beautiful.
Bloomberg Surveillance, weekday mornings on Bloomberg Television and Radio.
This process has built my trust and also my hope in the partnership with EVP Dombrovskis, his team, and the European Union. In terms of my confidence level, it is very high as of
Ms.
today.
Ty, Catherine Ty of Yale University, what you need to know is the score was 98-0. Her appointment by the Senate was unanimous as our trade representative, and she's had an interesting, successful trip. I believe from Brussels, she went right back to London for further negotiations with the United Kingdom as well. It is a tough tour of duty, but Josh Wingrove has been brave and accepted the mission to hang out at the Beau Rivage Hotel in Geneva, Switzerland. Breakfast on La Terrasse with Dominique Gauthier. We are thrilled that our hardworking White House reporter could join us from one of the most famous hotels in the world. Josh, the grandeur of all this is great, but I can tell as we were coming into this break that you are peaked after a long 4 or 5 days on the road. How's the president holding up?
Yeah, good morning. And yeah, it is a true hardship assignment here at the Beau Rivage.
Don't take the painting off the wall.
Oh, I'm just struggling moment by moment. Yeah, it's been a long trip. This is day 7 for President Biden, of course, starting in the UK and then on to Brussels for the NATO and EU meetings, which had that big Airbus-Boeing ceasefire, if you will, announced yesterday. And then we rolled into Geneva last night. I mean, all eyes will be on Joe Biden today, and one of the questions, is like, how will it go, and how long will it go? And
right.
So, I know I'm feeling pretty tuckered out, but that's what they make coffee for. I think, as a reminder, in about an hour or so, we might get brief comments from them, or at least an appearance on camera off the top of that small meeting that's going to begin about 4 to 5 hours of meetings. Then they're going to have those bigger groups come in, and the press conferences, of course, come after that.
Josh, is the approach of the United States of America and of this administration, and clearly with the abrupt change from the Trump approach as well, and you mentioned small, is Russia perceived as a small nation masquerading as a G8 country?
I mean, I think that they view Russia as, for lack of a better phrase, kind of a schoolyard bully, right? They frame everything as Russia and China are these sort of, malign actors, if you will, who are, fueling the sort of rising tide of autocracy that Biden wants to muster democracies to push back against. But it really is China that is Biden's focus in a lot of ways. Russia, as a sort of top strategic rival, Russia is more of a different case. So things on the menu today include that new START treaty, which expires in 2026. They don't know what's going to happen the day after that. And so they're going to talk about that. Biden's going to talk about human rights, Alexei Navalny, cyber crimes. Big question, though, is he's essentially drawing lines in the sand. And if and when Putin goes and then crosses those lines, we don't know what Joe Biden will do. We don't really know what, powers in some cases he has to do it. For instance, what if a ransomware attack comes from a Russian, but not the Russian government? So, those questions are going to hang in here tomorrow and the day after, and long after that.
And just by the way, for those watching television, we're watching the Swiss president arrive, and for those listening on radio, we welcome you as well. Josh, it's interesting that Biden comes from the G7 and the EU-US summit. He doesn't really have the full support of all of his allies. In the case of the biggest economy in Europe, Angela Merkel is, intending to send billions of dollars to Moscow to help Putin finance whatever he needs to do via the Nord Stream 2 pipeline. And in terms of the second largest army in NATO, Turkey is buying missile defense systems from the Russians. So here's a schoolyard bully who has a lot of really important assets and has kind of knocked our alliances off kilter a little bit. Can that be set right?
It's a great point, and let's take them step by step. Nord Stream, Biden has pretty much thrown in the towel. This thing is almost done. They figure they have no real power to stop it at this stage. That Erdogan meeting that he had a couple of days ago, they've said virtually nothing about it, including what they talked about the S-400s. Is there any sort of world where U.S. custody of those missiles could help smooth things over, get Turkey back into the F-35 program? It just doesn't look like it. Joe Biden, his approach to diplomacy is kind of the same as his approach to talks in Washington, in particular on that infrastructure bill that's stalled right now. He tries to avoid the sort of public saber rattling, so I think he's sort of trying to give Erdogan a little bit of room to not slap him around in public. So I don't know that we'll see the same with Vladimir Putin, though I think it's a different case. But as I say, he is going to set some fences, set some guardrails. How far they'll be, I don't know, but Joe Biden doesn't really, he's not there to make friends with Vladimir Putin. They don't think Putin is particularly, straight shooter.
Josh, Vladimir Putin, meanwhile, former KGB officer, arranging this meeting that's supposed to be about 4 hours, possibly more than that, at a time when, as we started this interview, Joe Biden is exhausted. So is everybody else, based on the tour of duty that has been going on. What does Vladimir Putin want out of this meeting?
Equivalency, I imagine. And maybe Joe Biden got a good night's sleep, or a better night's sleep than I did. So, fingers crossed, if you're his staff, that's the case. But, there were concerns on the American side that a joint press conference would make Joe Biden look like an equal to Vladimir Putin when they view Biden as, more than Putin, leader of a bigger country, bigger economy, what have you. So the appearance here Putin gets is that level of equivalency. And so, both sides are really pumping the brakes on expectations on tangibles. We might see, for instance, they've hinted maybe ambassadors will return to the countries. The ambassadors are here in Geneva. That kind of small ball stuff is what we're expecting. And then from there, really, really open question as to what will happen when Putin, you have to think almost inevitably, breaks through one of these guardrails that Biden sends.
Josh Wingove, an historic day. Thank you so much for your reporting. Josh, I recommend Albertine's, where you can sip on an invigorating smoothie or a coupe de champagne, s'il vous plaît.
Really?
Unwind in the cooling summer breeze with one of our tropical beverages.
Hold on a second, Tom. That's what you've been doing as Josh was talking?
Oh, yeah,
you've
of
been
course.
researching bars.
Researching the bars at the Beau Rivage. That's what you do, folks. Josh Wingrove, war duty in Geneva, Switzerland, as well this morning. I find the symbolism absolutely stunning, Lisa. The idea of picking Geneva, obviously with the United Nations being centered there, coming out of World War II, but just there's so much history there of the divides of Europe, the sharp separations of Europe back to the 17th century.
The divides and the unity on a global level with the UN, et cetera. There's this question of how much this trip is really a direct message from President Biden to the allies. How does he best support them given the trade relationships that Matt was outlining?
Yeah, Matt, what's the take here from Germany on this visit? What does Merkel want out of this meeting today?
I think Merkel probably would prefer that we just not talk about it that much. She's kind of stuck between a rock and a hard place. Germany gets 40% of its natural gas from Russia, and they're fixing to get more.
Yeah. That's a really huge story for Europe as well, and it's not just Germany with that hydrocarbon focus as well. It is Fed Day in America. Jana Hatsias will join us, and we are absolutely thrilled to bring you Patricia Moser from Columbia University. She is truly expertise on linking monetary theory into what the Federal Open Market Committee will doing. From Geneva, Switzerland, our Maria Tadeo's there. Stay with us. This is
surveillance puts global markets into perspective.
We're going to try to fold in economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Bloomberg Surveillance, good morning, everyone on radio and television. We welcome all of you to a most extraordinary Wednesday. We will get to a discussion of the Federal Reserve System in the meeting this afternoon. Our coverage begins at 1:30. Really looking forward to that smart conversation. Really looking forward to speaking with Diane Swank of Grant Thornton about her thoughts on a service sector recovery. Patricia Moser will join us here in a moment. In Geneva, we just spoke with our Josh Wingrove of our White House team. Jennifer Jacobs, I believe, is well in Geneva. And right now, Mr. Putin, the president of Russia, arriving in Geneva to meet with President Biden. This will be obviously very different from the visit of 2018 in Helsinki. No, it's not. At least it's not a Boeing. It's not an Airbus. I believe it's pronounced Ilyushin. It is a Russian aircraft of custom vintage.
Yeah, you want me to comment about the Ilyushin? This is everything that I have to know about it.
It's Aleutian with an I. I can't,
it's highly modified. There are five separate. There are five separate versions of this plane, long range, wide body, obviously. And it is the Aleutian IL-96-300PU. Those last two letters stand for whatever Russian is.
That's what I was going to say.
Matt Miller doing his Guy Johnson imitation, and we greatly appreciate that.
Exactly.
This morning, Mr. Putin, we're going to continue to show to you on television, again on radio. A beautiful day in Geneva as the two leaders will do some photo opportunity here in something in the vicinity of 30 minutes. Something in the vicinity of 3 seconds. We'll speak with Patricia Moser, a Columbia University truly expert on our monetary theory. Professor Moser, thank you so much for joining us on this Fed Day. Is there an operative theory at the Fed now, or are they making it up as they go?
So there's definitely an operative theory. It's different, or rather they're applying it differently than they did a couple of years ago, however. Look, the Fed hasn't hit its inflation target except for a few months for 12 years. It's been below it. And for a long time in academic circles, there has been a thought that if a central bank really is that far behind, then to get inflation up when it's persistently too low, you need to basically let the economy and inflation run hot if you need to. The idea is sort of targeting the price level rather than the inflation rate. That's what they're doing. And frankly, they've gotten what they wanted in the last couple of months.
They've certainly delivered what they've wanted, and they have it with the interest rate of 1.4854%. Professor Moser, there's the Georgia School of Timberlake and maybe of the Dallas Fed. There's a small school out in Palo Alto where they talk about inflation targeting of a certain vintage. Can you reflate and target, or again, is it just sort of get the theory going and wait to see what happens?
Right. So I think part of the reason, or maybe part of the disagreement in this, and where my personal views come down closer to where the Fed is that the Fed is managing a supply shock, a big aggregate supply shock. We didn't see it for about 14 months because the aggregate demand shock from COVID was even bigger. But aggregate supply shocks are tricky for a central bank because they push output down and inflation up, and so your two goals go in opposite directions. Right now, though, the Fed has, frankly, the luxury that inflation has been too low for too long of allowing inflation to be over the target. And if the supply shocks are temporary, that's the if, then inflation's going to come back down.
Well, but Patricia, this is the bet, and a lot of people seem to say, you're right, they're buying what the Fed is selling, and they're saying that we are confirmed that your view is the correct one. And yet, there is the concern about financial risk. We have junk bond yields at record lows, issuance at record highs. You have a lot of increasing speculative activity throughout markets. At what point does financial risk become a major concern for the Federal Reserve in their balance of risks to the outlook?
So I'll be blunt with you. I think that it already is a risk. And the longer the rates stay really low, and the longer that you don't get inflation and growth back to normal, the bigger that risk gets over time. Those risks don't diminish because you don't do anything about them in the short run. So it is a risk, but it's a risk I think that has to be taken if you're going to normalize things. And better to do it sooner with a small amount of inflation while the economy is growing strongly than to wait and try to do it later.
But Patricia, and I apologize for cutting you off, but this is really the conundrum. Can the Fed ever normalize? If normalizing will disrupt the financial stability that's been threatened by the increase in debt, by the increase in speculation, that will be curtailed by any Fed normalization?
But if the Fed doesn't normalize that debt problem and that risk-taking problem, it's going to get bigger, not smaller. And then the risk is even bigger in the future. That's exactly my point. It is a risk, and it needs to be managed very carefully. And it's one of the reasons on the policy side, the Fed is planning to go very slowly, as I said, because it has the luxury to go slowly. But normalizing interest rates has to happen at some point. We haven't seen it in 12 years, and it's going to be bumpy. I have to say that right now, the financial imbalances in the private sector are not so huge that I think they would create a financial crisis. For for one thing, while the housing market is doing much better and real estate markets are doing better, they're nowhere near where they were in the mid-2000s. And those are always the biggest financial stability risks. Now, I will say the fiscal deficits could get expensive to finance. And I view that as a risk, although frankly, it's a risk, that's bigger for most of the other countries in the world than is big. It's big enough for the United States, but it's much bigger elsewhere.
Is it possible to have fiscal deficits of this size and growing without some very serious unintended consequences to follow? We talked to Peter Hooper of Deutsche Bank last week. He pointed out that the last time we saw something approaching this, but it wasn't the same as this, giant monetary and fiscal stimulus together, was World War II. And that was followed by inflation of 8.5% in 46, 15% in 47, 8% in 48. I mean, those kind of numbers we wouldn't be able to stomach those kind of numbers today.
Right. No, that's very true. We also don't have the economy back then. Inflation definitely ran hotter then. But could we have several years of much higher inflation? Yes. And on one level, assuming that inflation expectations don't get out of control, that's a big assumption. That's the game, and that's where we are and where we've been. If it is viewed as temporary, those things are actually good because they get you. They do get interest rates in the financial sector to. First of all, they will allow the economy to grow. Interestingly enough, there's a decent amount of literature out there that reminds you that more inflation kind of greases the wheels, actually, of change in the economy. We haven't talked about that in like 25 years in economics, but there's plenty of evidence out there that that's the case. Secondly, it allows for more flexibility for people and industries and everybody else to move around. And that's the other sort of plus side of moderate inflation. I'm not talking 15% here, but moderate inflation.
Right. What's the linchpin that holds transitory inflation back from becoming something more permanent? Because, El Arian today in his opinion column is talking about the problems on the supply side maybe leading to employers having to offer more money to get workers to do their jobs. Meanwhile, Jan Hatzius from Goldman Sachs, with whom Tom and Lisa are going to speak in a little bit, says they don't see a problem with wages rising. They don't see a price wage spiral. Is that what you call that?
Yes.
Is that
yes.
the main problem?
It is, although we should be very careful here that real wages have been stagnant for about 25 years in the United States. If you have productivity go up and real wages go up, that's not a problem. It's not going to create inflation. It's going to shift the share of income into labor and away from capital, but it's not particularly inflationary. It's when you get wages leading prices that is a problem. We're nowhere near that. So on this one, I have to say, I think that's actually a risk that's years away, personally. I think you're going to have to remind me what the first question was that you asked before we got into wages and prices.
No, I was just going to ask what makes inflation, what brings it from transitory to something more serious than that?
It's the nature of COVID. Let's be clear, the United States is way ahead of the rest of the world in its economic recovery. It's also consumer to the world, which means its demand is surging, and the rest of the world is still trying to get vaccines out and get out of shutdowns. So they're not producing. The global supply chain is kind of a mess, and it may be a mess for a while until the rest of the world catches up. But that is temporary. It's temporary not in the weeks kind of thing, but in the months and quarters sort of sense.
Professor Moser, thank you so much. Love having you on Fed Day. I hope we can make this in every Fed meeting occurrence. Patricia Moser at Columbia University. The president of Russia is at Geneva, waiting for him to disembark from his plane as well. I think it is so important to place in context the two nations. And one of the great ways of doing this, not always accurate, is per capita GDP, and to really show the movement of Russia with its oil-based economy from a frontier or emerging economy with all of the baggage of the Soviet Union and such, is per capita GDP. The U.S. with a truly, on a relative basis, stunning statistic worldwide. In Russia at 11,600. Poland is 16,000. Estonia is maybe double that at 23,000 as well. But the differences here are really quite something wrapped around Russia as part of the G8 community, and of course with the sanctions pushed aside as well. Lisa, it's always historic, and again I say this, Lisa, I'll sound like a broken record, so different than 3 years ago at Helsinki.
The relationship between President Trump and President and Putin, Prime Minister Putin, as well as how Biden is treating Putin, vastly different. And there is a real question of the emphasis here on the relationship with the allies above all else. How much will President Biden cater to those friendships?
Well, we will see. And of course, Mr. Putin entrenched in his leadership position. There is a fractious domestic politics in Russia, but certainly his tenure here of many decades and looking out into the future as well. Our Josh Wingrove, our Jennifer Jacobs in Geneva with Maria Tadeo. We'll continue our coverage through the morning. Please stay with us. And again, this afternoon at 1:30, the meetings of the Federal Open Market Committee. Coming up, good news on the pandemic. Stay with us. This is Bloomberg.
With the First One News, I'm Ritika Gupta in Geneva. Today, Joe Biden and Vladimir Putin will come together for what could be 4 hours of meetings. Officials from both the U.S. and Russia are keeping expectations low in what has become an adversarial relationship. The two leaders will look to reach agreement on starting a new round of arms control talks. They also may take steps towards restoring diplomatic channels that were severed as relations plunged over the last few years. Critics of U.S. technology giants are claiming victory. President Biden has named Lina Khan chairwoman of the Federal Trade Commission. Khan is one of the most prominent advocates of aggressive antitrust enforcement against big tech companies. Her appointment came hours after the Senate confirmed her for a seat on the FTC. In Louisiana, a federal judge has blocked the Biden administration's temporary ban on new oil and gas leases on public lands and offshore waters. It's a victory for 13 Republican-led states that filed a legal challenge. The oil industry says that any long-term halt in leasing jeopardizes jobs and energy production. And global bankers hoping to skip Hong Kong's tough quarantine regime will have to wait. Bloomberg's learned the bankers who have applied to take trips this month are being advised to postpone. The pause is a blow for fully vaccinated bankers looking to travel outside Hong Kong, also for overseas executives wanting to avoid 3 weeks of quarantine in a hotel. Blackstone is on the verge of its biggest real estate investment in China. Bloomberg's learned that the private equity firm is near an agreement to buy office developer Soho China. The company could be valued at about $3 billion. Shares of Soho China soared 48% last week. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
trading revenues coming in better than expected, everything. Cash, $1.4 trillion of cash, one of the most notable aspects of this report that was stellar.
This is going to be a virus that's with us long after the public health emergency is ended. And this is going to probably be something that's a routine childhood immunization where we don't think much of it, just how we don't think about tetanus or diphtheria or pertussis. And it's given to children at some period of time, and it becomes normal.
My grandmother used to tell me about diphtheria. It was not funny. And there was a period 120 years ago where a lot of children died of diphtheria. And then to the smart people of pharmacology and medicine in America, and frankly across Europe, that problem went away. We're at that point. I'm Esha Daljo with Johns Hopkins University. His colleague in emergency medicine joins us on this incredibly busy day. With a quick brief from Lauren Sauer of Johns Hopkins University as well. Lauren, we're going to get to 0 deaths. Then what do we do?
Well, the first thing we're going to do is continue to maintain the push for vaccination. As I mentioned earlier, we'll likely see that this becomes a childhood vaccination. So this would go into the toolkit that we have to protect children, as they get ready for school, as they get ready as little kids to go out into the public, and give them the immunization to really keep those cases low and make sure that we don't come to a place where we have unvaccinated adults who are very susceptible, or even unvaccinated children who are susceptible.
I look, Lauren, of the children susceptible. How close are we to a vaccination for the young offspring, those under, I believe, 12 years old?
Yeah, we're definitely getting there. It's really exciting to see. The 12-year-olds and up are starting to get vaccinated. The vaccines have gone through the clinical trials. We have younger children in vaccination protocols.
I don't mean to interrupt, but when the 14-year-old gets vaccinated and demands a trip to Brandy Melville, is that part of the medical prescription?
I don't think it's part of the medical prescription. We definitely don't write it on the pad. But we do encourage people to really take advantage of those vaccines so that they can keep those things on their bucket list.
Honestly,
okay, great.
all I can say, Tom,
Pick it
is
up,
that
Lisa.
anytime that John accuses me of self-serving questions, I'm going to replay that clip for him. Lauren, this does feel a bit like as more and more people get vaccinated and restrictions get lifted, this feels like health officials are the parents in a car that are driving around the block looking for the perfect parking spot, and we're all the kids sitting in the back seat saying, we're right there. Can we please just get out of the car? Are we there yet, Lauren?
We are so close to that perfect parking spot. It's unbelievable. I mean, I think you're starting to see those restrictions being lifted because we are getting out of the car, right? We're enjoying the benefit of having many people across the country vaccinated. We're seeing those cases drop. We're seeing, I think it was like a 13% reduction in cases just last week alone. And so we're seeing how well these vaccines are working. It's absolutely incredible how well these vaccines work. And we continue to add new ones to our global toolkit, Novavax, the most recent one with showing really promising data. So I think as we move into summer, we will see many of the restrictions lifted across the country. We're already seeing the masking restrictions, the physical distance restrictions lifting right now.
Hey, Doc, the UK is, it looks like from the Johns Hopkins website, as far along as the US is in terms of vaccinations, and yet they have now had a disastrous about-face in terms of lifting their lockdown restrictions. Could that just as easily happen to us?
I think that many of the cases are with the Delta variant, and we are seeing an increase in the Delta variant here in the U.S. as well. What we're hoping is that our vaccine coverage, which is still protective, many of the vaccines are still protective against the Delta variant with 2 doses, was in place early enough that we will have protection against those severe cases, those hospitalization cases. So we may see more infections. We may see infections creep back up, but the hope is that we also see people staying out of the hospital, people staying more well, people having less severe illness.
Is there a certain point at which, we've vaccinated as many people as we can possibly convince, and you just leave the unvaccinated to their lot?
I think if you ask any person in public health, they would say, no, you keep fighting that fight. You keep trying to get everyone vaccinated. At some point, public health will ask and government will ask, are the resources that we're spending on trying to get people vaccinated broadly still working? Is it still worth the money that we're spending on these programs? And I think for now, certainly that money is definitely important. I think as we target vaccination strategies, the place where we'll want to continue to target is where you have large pockets of either resistance or hesitance or access issues. And so if you're spending all your efforts, all your resources on finding that one or two random people across the street who are not willing to get vaccinated in a town or a community that otherwise has really good coverage, that's probably not the best use of resources. But if you're identifying large groups or large communities of people who are either hesitant to be vaccinated or haven't been able to access the vaccine in a systematic way, then you change your resource strategy and you get vaccine there as fast as possible.
And just to give you a sense that, yes, the virus is on its way out, but still very much percolating. Japan is planning to lift its virus emergency in Tokyo on June 20th. This according to news reports on the ground. Just to give you a sense of how the rest of the world is still grappling with this. Lauren, just real quick here, I'm wondering, we're talking about COVID. We've been talking about COVID for the past 14, 15 months. There are a host of other health problems that in some cases have gotten worse during the pandemic. People not going to get care, people not necessarily getting exercise or taking care of themselves. How bad is it? How much sicker have we gotten during the pandemic, aside from COVID?
Yeah, it's a great question, and it is an unfortunate question that we are going to have to ask, and we're going to have to continue to ask. I don't have a great answer for it, but I think we all know that many people delayed care, they delayed coming to the hospital, or they couldn't reach their healthcare resources because of the influx of COVID cases. I think it is a public health issue and also a clinical issue that we're going to be untangling for a really long time, unfortunately, looking for ways that COVID had these secondary effects on the health of our community, both here in the U.S. and globally.
Lauren Sauer, thank you so much with Johns Hopkins this morning. Good news here from California and New York on the pandemic in America, and good news is mentioned from Tokyo as well. Futures flat, Dow futures a little red. The NASDAQ goes the other way, a little green as well. Lisa, we've got to go back to 74.26 on oil. That gets my attention.
The idea here that the supply is not coming on as quickly as the demand is restarting. A question also about Iran, whether they will come to some sort of nuclear accord akin to what was agreed upon in 2015 and possibly bring those barrels back online. That's looking perhaps a little less likely, which has also been giving a bit of a lift here, Tom.
We'll see as well. Matt, what do you observe in Berlin?
What I'm observing in Berlin is increasingly high temperatures here. It's getting hot.
Thank you for the weather report.
We're getting to the beginning of summer. Look, I can't think about anything other than the Fed. I have to be honest. You know, the Biden-Putin meeting is interesting, but my focus, because of Lisa's column today, because of Mohammed's column today, because of what we saw from Peter Hooper and co., is all about what happens with the Fed. I'm glued to the screen for your special.
Well, and what car is Fed Chair Jay Powell going to drive?
He's a Prius man, I think.
In Helsinki, 3 years ago, make it the price of oil unched $72 then on Brent crude, and now $74 a barrel. Stay with us from Geneva, from Berlin, and New York. Good morning.
project and doing a project is something different. And that's why we are so proud. We have started now the first one here. It's running, and I believe that we will see scalability. Now a base to show use cases, so we can develop new cases on how to build a hydrogen economy.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Crypto is a nuanced issue, and it's possible the U.S. gets crypto wrong.
You'll see more workers re-enter the labor market, and they're actually entering a labor market that is very hot right now.
We are in a boom. There are some supply-side dislocations that are a bit confusing, but I think growth is going to be quite strong.
What is the Fed going to do, and how does that play into everything else? It has been a Fed-driven market.
If there's anything that worries me right now about inflation, it's not even what's in the data, it's what's in expectations.
The reality is that all of these things do go away, but you just don't know how long they take to go away.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good morning, everyone. Bloomberg Surveillance from New York and from Geneva, Switzerland. We welcome all of you today on radio and television worldwide and across this nation. An extraordinary busy day. Jan Hatzius is to join us later on the Fed. Looking forward to speaking to the gentleman of Goldman Sachs, many other worthy guests. Particularly thrilled that Romain Bostic with us today, sitting in for John Ferro, and lots going on, of course, in Geneva, Switzerland. We'll go to Youssef in Geneva here in a moment. The news flow, Lisa, is extraordinary. I don't know how to dovetail the meeting and the Fed meeting together, other than to say it is a world in recovery from pandemic.
The other way to dovetail them together is that there's so many meetings going on that have to do with serious geopolitical issues, cybersecurity, how to deal with competitive competition around technology, so many massive issues. Nobody cares in markets. Everyone's watching the Fed. They want to know when they're going to buy a little bit fewer bonds each month. That is going to move markets more than any rhetoric out of any of these political leaders, and that says a lot, Tom.
The pretty much on schedule meetings. This is Mr. Putin landing a bit ago at the Geneva airport, a motorcade to the Villa Lagrange. We'll talk about the villa here in a moment. Right now, we need to address the markets, and Romain Bostic, I would suggest the stasis of the markets into this meeting.
Yeah, stasis is certainly the right word. We've kind of seen this now, a bit of a holding pattern here really for the past week and a half. Even if we don't get any sort of meaningful change in policy or even a change in tone in policy, I think the market just wants to hear it out of Powell's mouth. They want to hear is what's going to happen here over the next few months. And I think once they hear that, you'll start to see maybe a little bit of movement. Which direction, Tom? Who knows? But I think you will see some movement.
We'll give you the television image and describe them on radio. Maybe the one thing that looks like Helsinki of 3 years ago is a motorcade going by and then an empty street with the crowds waiting for the next motorcade to attend. Because of the news flow this morning, I think we should get to the data here very quickly here. Futures at -2 remain. The yield, 1.48%, has been locked for 2 days.
Yeah, locked in. I think the fact that it's been locked under 150, right around 150 for a couple days, gives you a sense here of what the bond market is expecting. And of course, that reflects what you're seeing, of course, in S&P futures as well as in NASDAQ futures as well. That's what the market's thinking is right now. We'll see if that changes here in a few hours.
Oil advances $74 a barrel. Lisa, let's get to the brief.
Yeah, today we're expecting President Biden to be meeting with Vladimir Putin of Russia. That motorcade just arriving. The meeting expected to last 4 hours or more. Vladimir Putin, a former KGB officer, knowing that President Biden is tired after his tour of Europe. The question is, do we get anything material from this meeting? What do we get in terms of President Biden's relationship with Russia versus President Trump's relationship with Russia? 10 a.m., Treasury Secretary Janet Yellen is testifying in front of the Senate Finance Committee, talking about President Biden's plan for the budget. Taxes, very much front and center. How much is this still part of the conversation? How much is the Democratic Party really going to drill down on taxation and higher taxes on individuals and corporations, despite some of the pushback on the Republican side and even within the party? And then at 2 p.m., that is the all-important Fed rate decision. My question is, what does tapering mean, right? I mean, do they have to get down to 0 before they raise rates? Do they give any guidance about that? What does it mean if they do bring the dot forward, or at least one or two members brings their dot forward to a 2023 rate hike? What does that mean in terms of when that could potentially start the tapering, especially if they don't talking about tapering, Tom?
Very good. Lisa, thanks so much. And again, the news flow extraordinary right now. Mr. Biden arriving at Villa Lagrange right now. We'll continue to show you those images for those of you on radio. The red, white, and blue of the Russian and the American flags lined up on the lawn as the motorcade comes in. The building is absolutely extraordinary. This is a family residence from the 19th century gifted to the city. And the absolute hallmark of this villa was an acclaimed Catholic Mass by Pope Paul VI a good 50-plus years ago. I believe it was 1969. And I really can't say enough about the symbolism of Paul VI attending Reformation Geneva to attend a Catholic Mass. Now it is most different here with Mr. Putin greeted by the leadership of Geneva and Switzerland. And again, we'll see images, we hope soon, of Mr. Biden and Mr. Putin as well. I want to squeeze in here Youssef Gamal al-Din with us. Excuse me, Youssef. We got 8 things going here in my ear, but it's my fault, Youssef. And this is so important at the Fairmont Hotel. This is on the other side of Lake Geneva, looking back at Reformation Geneva and, of course, the acclaimed fountain as well. Youssef, Geneva has done this so many times. What's different this time?
The stakes just feel a bit higher. And in the run-up to this, you've talked a little bit about how both sides have described the relationship as being at the worst level in years. There's been quite a bit of preparation for that. When I flew in, the airport was stacked with Russian and American planes. I flew in overnight and struggled to find a parking spot. The whole city has been, of course, ramped up in terms of security. Certain parts of the city are in lockdown. One of the local newspapers headlining it actually, Biden puts Geneva into the global spotlight. And that gives you a bit of a reflection on how the city looks at it. And then in terms of what we might get in terms of outcomes, it's really about a small step forward rather than any remake of the kind of grandeur of 1985 with Gorbachev and Reagan or Khrushchev and Kennedy in the early 1960s. But it does have those historical underpinnings, and I can very much feel it here on the ground in Geneva.
And we're expecting Joe Biden to arrive in just a few minutes here. Youssef, anything material, is there anything material that could potentially come from this?
Yeah, so what you could get is a restoration of diplomatic ties. That's the kind of thinking and the feedback that we've been getting from officials that we've been speaking to. So that means a resumption of consular services. So some of the visas start working again, and that could be a small step forward. You might get something on cybersecurity, maybe something on climate change. But what I will say, and it's actually been quite stunning, is to understand that there are no plans for a dinner. a breakfast, a lunch. They're not going to sit down together. So
Well
that's bizarre in
said.
itself.
Yes,
And then the sheer heat of the day to drive me to take off my tie before I go on air, that's also an entirely different
unprecedented.
thing
It's
to
truly a
factor in.
surveillance. It is a surveillance break exclusive, Romain.
And it's, look, Youssef, at the end of the day here, though, whether we have sort of the pomp and circumstance of the meeting without necessarily the pomp and circumstance of the press conferences and dinners and such, there's a general sense here that Putin has solidified a certain amount of control over the Middle East in a way that the U.S. maybe had a little bit more influence and a little bit more control. Is there a possibility here that the U.S. may be able to reassert itself in the region and do so, I guess, against the whims of Vladimir Putin?
That's going to be one of the important talking points when they sit down together over the coming hours, is Russia's leverage in certain parts of the Middle East and Africa, and how there could be more coordination. Because oftentimes in a lot of these conflict zones is that you find that the US and Russia are on opposite sides of the spectrum. So that's going to be one of the driving priorities that Mr. Biden is going to zero in on. But Mr. Putin on his end will firmly believe that he has the advantage, especially given where oil prices are and how that's kind of beefed up some of the government coffers.
Yusuf, I want to go to one of the topics here, and I really want to go to your encyclopedic knowledge of the Levant in the Middle East. Syria is a major flashpoint here. We can wax philosophical all day about the Levant, but the bottom line is Syria is front and center here. With the turmoil politically in Israel as well, how does the Syrian discussion change today because of the end of Netanyahu?
It just makes it a lot more pertinent to find common ground and a proper solution that you can execute on the ground. The United States is losing influence in certain parts of the Middle East. I mean, Syria is a good example of that, where the Assad-supported regime, of course supported by President Vladimir Putin, they're able to hold ground. And so in coordination with Iran and Turkey and Israel and some of the other powers, there's in many ways, here's what's being told to me sort of throughout the last few weeks. The U.S. needs to step up in terms of leadership in the Middle East, because the absence of that is just going to invite other powers like Russia and China to continue to build out. Whether the U.S. has the political capital, the political appetite for that, that's an entirely different conversation, guys.
Yusuf, thank you so much. From the North Shore of Lake Geneva, looking back at the Reformation Old City this morning. Right now, we are absolutely honored to bring in from the Kennan Institute their Deputy Director, William Pomerantz. In the United States of America, he is truly our expert on law in Russia, truly going back to Peter the Great in his important book of a few years ago. Professor Pomerantz, thank you so much for joining us today. If you were to write a long telegram from Geneva today about this summit, what would you say, or is there not enough to say, so it would be a Pomerantz short telegram?
I think it would be a very short telegram, because we still need to see what actually the two leaders agree upon. We don't have any preliminary agreements. We don't have any preliminary agenda. So I think a lot will depend on the communication between the two leaders and what comes out of this meeting. It is much hyped. It is that the relations between the United States and Russia are at a low ebb. But this is not the Cold War. I don't anticipate Mr. Putin arriving like Mr. Gorbachev and having a surprise. I think it will be a business-like, workman-like meeting. They'll agree to disagree on a lot of things, and they'll try to see where they can cooperate.
Professor Pomerantz, very importantly here, and I think of the Soviet Union. How much of the Soviet Union tone or diplomacy is represented by Mr. Putin, or is Russia completely moved on from the legacy that you're expert in?
I think that Vladimir Putin does have certain Soviet tendencies. In terms of international relations, he is not interested in joining the global order, as it were. He is interested in sovereignty and Russia's ability to assert its sovereignty domestically and overseas. So I think that this is really the important aspect of Putin's foreign policy. It's not overly ideological. It is just to make sure that Russia is respected and has its sphere of influence. And this is not only a Soviet tendency, this goes back hundreds of years.
William, before this summit, President Biden met with the allies and asked for their input about how to handle this meeting. I'm wondering, how much is Biden talking to Vladimir Putin, and how much is he talking to the allies in terms of supporting how they want their relationship with Russia to develop?
I think coming out of the EU and the NATO summit, we have seen a resurgence in the role of the United States as a global leader and its ability to talk and communicate with its allies. So I think that going into this summit, President Biden has listened to his allies. There were some important achievements coming out of the EU and NATO summits, both in terms of dealing with China and with dealing with Russia. And I think that one of the real victories for Joseph Biden happened before this summit with Putin. And that is that he reasserted global leadership and reasserted the relationship and with our traditional allies.
William, we are expecting President Biden to arrive at this summit any minute, his motorcade on the way. There is a question, though. President Biden is toggling between a harder stance that domestically is politically popular and then internationally is much more delicate, given some of the trade relationships between Europe and Russia and given the geographic proximity of those regions. How is President Biden toggling this? How much has the European view and, frankly, the U.S. domestic political vision of Russia having a hardening line diverging at this point?
I think leading up to the summit, President Biden has given Europe a tremendous victory in the sense that the United States is not going to sanction the owners of the Nord Stream 2 pipeline, and that is now going to most likely be completed. So in terms of listening to the United States and the European allies, I think President Biden has demonstrated that he wants this relationship with our European allies. And he has decided that that is acceptable, even to the point of not fulfilling Congress's wishes to sanction owners of the Nord Stream 2 pipeline. So I think listening to European leaders, I think that they're trying to present a united front. It's always difficult to unify Europe on foreign policy issues, but I think President Biden went a long way to healing the rifts that occurred during the Trump administration.
Absolutely. And of course, William, though, I mean, we've been here before. We're actually watching on the screen right now. I believe that is the motorcade of President Biden working its way through Geneva here. Biden, of course, going into this meeting. But of course, we've been here before here with Trump, with Obama, with Bush. There's been a lot of attempts to sort of restart, re-kick off the relationship between the U.S. and Russia here. Is there any reason why outside observers looking at this should be more hopeful that this time around the outcome is going to be different?
In one word, no. I think President Putin has decided to go it alone in terms of international foreign policy and geopolitical objectives. So I think that there is not going to be a reset or anything like that. And Biden has asserted that he's not looking for a reset. We are looking for ways to which to tone down the rhetoric. We are trying to identify areas where we can cooperate, which sounds like the reset, but I don't think is ambitious as a reset. I don't think that President Putin is going to change his political stripes and his geopolitical goals. He has a go-it-alone strategy, and he has asserted that both politically, geopolitically, and economically. He has introduced various policies such as import substitution, sanctions, counter-sanctions on food, etc., that suggest that he's not interested in becoming part of the international global order, that Russia really believes that it needs to go it alone, and that is the policy of Vladimir Putin.
If you're just joining, Well, let me reset here, Mr. Pomerantz, and we'll come back to you in a moment. On radio and television, we reset this morning. We welcome all of you worldwide and across this nation. William Pomerantz with us with the Kennan Institute, their deputy director. We're absolutely honored that he could give us perspective here this morning. On television, the 19th century, actually 18th century building, Villa Lagrange, where Mr. Putin awaits the arrival of the President of the United States en route. My major observation is the U.S. motorcade was maybe going at a faster speed than the Russian motorcade. Professor Pomerantz, I think very importantly here is what we've observed over the last number of days, and many, John Mearsheimer at Chicago, Richard Haas at the Council on Foreign Relations, suggesting a NATO overreach. Did NATO reset in the last number of days their overreach of adding countries over the recent end of Cold War years? Was there a reset to NATO which could be in discussion today?
I don't think there's a reset to NATO. Obviously, there is the addition in the communique of dealing with China, although there isn't really overwhelming agreement on how that should be done. So I don't think that we've had overreach in NATO. The second important reason why I don't think we have overreach is that President Biden yesterday issued a very strong statement that NATO is not going to have Ukraine join it anytime soon, that Ukraine has to deal with its domestic policies, it has to deal with corruption before it gets an action plan, before it becomes a part of NATO. And that is an important objective of Vladimir Putin. Putin does not want Ukraine to become a member of NATO. And it appears now that Ukraine won't anytime soon become a member. So I don't see overreach. I see trying to deal with a post-Cold War world where China plays a bigger role. I don't see that that NATO is overreaching. And I think the best evidence of that is that it's going very slow in terms of inviting Ukraine to become a member.
President Biden pulling up to Villa Lagrange and waiting here, the Swiss authorities waiting to greet the President of the United States, and I believe inside Mr. Putin, and we'll get an image of the two leaders here in a number of minutes. William Pomerantz, just so importantly to any of us, is this word that the President of the United States uses, autocrat. When we see that within the media, when we see that within international relations, how do you define the autocrat that Joseph Biden sees?
I think that when we talk about an autocrat, and especially in the Russian sense, we deal with a leader who doesn't have to address domestic politics, as it were. That Putin's word is the final word. Now, he has different issues that he has to deal with, but he doesn't have a legislature that is opposed to him. He doesn't have a judiciary that overrules him. Indeed, in the aftermath of all the constitutional amendments in 2020, Putin has solidified his power. So when we talk about an autocrat, it's someone who doesn't have to really deal with the vicissitudes of politics. Power is always in the hands of the autocrat. And in Russia's case, Putin's decrees, Putin's word can become law. So this is obviously very different from the American system of checks and balances and separation of powers. But this is what the advantage of Vladimir Putin is. He doesn't have to address Congress. He doesn't have to address other constituencies. His word becomes law.
William Pomerantz, thank you this morning for joining us with the Kennan Institute. Just a spectacular brief there on this moment for Russia and the United States. Lisa?
Yeah, this has been a fascinating development, especially in light of all of the news today, with markets very much focused on the Federal Reserve, on inflation. But Steve Chiavarone, a Federated Hermes portfolio manager who is joining us now, there's a question of whether there could be some sort of existential threat that could upset markets, that they have been lulled to sleep with the VIX near all-time post-pandemic lows. And yet we are talking about cybersecurity. We are talking about international tensions with China. How at risk are markets right now, given some of the quiescent feel that we feel beneath the surface?
Good word to start off the day. I like that.
Happy Wednesday.
Happy Wednesday to you. Look, You know, I take a very simple view on volatility. I think it starts with uncertainty around the federal funds rate. If you're uncertain about the federal funds rate, you're going to be uncertain around what the 10-year yield is likely to be, which is going to give you an uncertainty around what the right discount rate is for stocks. Right now, the market's convinced that the federal funds rate is going to be zero forever. I think they're going to be shaken from that belief over the course of the next several weeks. I think inflation is going to run hotter and longer than the Fed anticipates. We're going to start to get into the process of tapering, probably around Jackson Hole, with maybe some hints today.
Yeah.
And once there's a little bit more uncertainty around that federal funds rate, I think you're going to see some uncertainty build, you know, throughout the rest of the markets. I think that's really at the heart of the matter.
Yeah, and of course, all that ties into with regards to people's outlook for inflation here. A lot of debate about the transitory elements of that. But Steve, I'm wondering if you could maybe define what transitory means, because in some sense here, some people look at this as something that can be resolved over the course of the next few months into next year. There are other people who are looking at transitory and saying transitory can be 2 or 3 years and will still survive.
Well, I think that's where we would differ, I think, from where the Fed is right now. We think transitory is a longer period than I think what they've communicated. We don't think transitory is 6 months. We think transitory is 2 years. So even if you were to see CPI, for example, slowly grind down to its 3-year average rate by the end of the year, you're still going to print a 5.25% year-over-year CPI reading in December. That's a really elevated level. And so our view on transitory is that, yes, long-term downward pressures on inflation will assert themselves, but they're going to assert themselves slowly, and we're probably going to end up at a higher level of inflation than what we had pre-pandemic, and the markets are going to have to digest that, and we'll see how the Fed responds.
Right now, we have the two leaders. We're going to go back to Geneva here as well. With the two leaders, truly an historic moment here. And of course, the overlay from 2013 speaks as well. Mr. Putin, and again, the flags of Russia, and in between of Switzerland, the red and the white cross of Switzerland, and the United States flag as well. Let's listen in.
Et elle est heureuse de pouvoir ainsi, conformément à sa tradition des bons offices,
Francine Lacroix, and we have gone down in flames because Abramowitz, Bostic, and King's French is really not that
Je
good.
parle un peu de français, but that's
I spent a wonderful time in Geneva in my youth, and I can assure you, Lisa, my French is as weak now as it was then. To the gentleman on the porch of the Villa Legrand, Mr. Biden to the right of the gentleman, Mr. Putin to the left of the gentleman on a beautiful summer's day. For those of you on radio, our Youssef Gamal Aldin making very clear that it is a hot, steamy day in Geneva as well. And now in Russian, we're hearing the various translations of this historic moment. Lisa, this is stunningly different than Helsinki.
It is stunningly different, and that calm, that sort of return to the old normal a bit with the U.S. aligning itself more closely with Europe is one thing that's given some stability. Steve Chiavarone, before we let you go, I'm wondering what your perspective is going forward about the global recovery, about the global working togetherness, and that, yes, that's a CFA term, to try to pull everyone out of the pandemic, whether the unity that we saw and perhaps the lack thereof in the G7 and the G20 is feeding into your outlook for the economy, for bond yields, for the Fed's view. How much are you counting on something more akin to a synchronized global recovery, at least in the months ahead?
Yes, certainly much more than where we were a couple of months ago. And I think that really has to do with vaccinations, both Europe kind of picking up their vaccination level, some sharing of vaccination with the United States and the rest of the world. And then I think ultimately on a longer term basis, how the allies coordinate with regards to China, I think is going to be a critical issue. Russia is important geopolitically, but China obviously is the most important relationship from an economic perspective globally. So that cooperation, I think, is key to things like information security, trade policy, et cetera, moving forward.
The two leaders going back into the Villa Legrand for Lisa. You said this is 4 to 5 hours of discussion.
That's what President Biden said. President Putin actually came out and said that the meeting is expected to last 4 to 5 hours, which is amazing considering how long people have been on the road with the G7 and G20, and just speaks to his ability to try to get the upper hand.
They'll have a staffing. I'm sure they brought along a plane load of people to just through the next 4 or 5 hours as well. Steve Chiavarone with us with Federated. And Steve, I thank you so much for joining us this morning. So much of this comes down to the Pacific Rim. I've been talking about a Pacific Rim recovery, which you see in prices and appreciating currencies as well. It Federated, what is your weighting towards China and towards the Pacific Rim, given the diplomacy of the Biden administration?
So frankly, we've been no better than neutral in the Pacific Rim and China specifically. A couple of things at play, right? You have the People's Bank of China, which is really pushing against inflation and growth. So you've got an element of having to fight the Fed there right now. And in addition, our view is that inflation pressures are going to continue to mount and you're going to have higher bond yields. Well, China, which had traditionally been a kind of commodity value type of economy, has really become more of a tech economy. And we see it correlating more with domestic growth, which is not a part of the market where we're overweight. And then finally, vaccination rates in the Pacific Rim just are not yet as good as they are in Europe and the United States. And I think that that's going to take some time, given the number of people that need to be vaccinated. So we've been more centered on the Western world in terms of our overweights. We've been a little bit underweight towards the East.
Steve Chiavarone, thank you so much. Greatly appreciated on this Fed Day and, of course, a day of international diplomacy in Geneva as well. We need to do a data check to keep you abreast of the markets. Futures at -2, Dow futures -55. NASDAQ goes the other way. I mean, help me here, Romain. The NASDAQ SPX dialectic has been really strange the last couple of days. It's just sort of like flip, flop, flippy flop. Flippy floppy, do I have that nailed?
Yeah, I think they call that rotation, or maybe, I don't know. There might be a more technical term for that than flip-flop. But look, you're absolutely right here, Tom. And one of the reasons why we saw some of those big cap tech stocks start to get bid again was really that drop in yields that we've seen over the past week or so here as we head into that Fed meeting. And I think the lower for longer narrative, if that is sort of reaffirmed at this meeting and press conference later today, then I think you can see maybe that NASDAQ continue to reassert itself. Remember, we did have that record high 2 days ago.
Honestly, I'm looking at this. I just keep looking at the commodity complex. Yes, we're seeing oil go higher. Brent crude is $74.43. But if you take a look outside of that, the lumber has been absolutely crashing, which I find fascinating. The idea here that we were talking about the highest lumber prices ever, they have declined substantially. We've seen copper well off. This idea that perhaps...
Come on, Lisa.
Yes, what?
You nailed microeconomics at Chicago. You got to your third or fourth course, and you got the dynamics there. If price goes up, demand goes down, right?
Well, is that really what's at play here, right? I mean, how much is this that issue, the fact that perhaps home building is perhaps still being delayed or pushed back because of the increase in lumber prices, and how much is this having to do with China pushing back on commodity prices, unleashing some of its state stockpiles in order to counter the commodity prices, this sort of weaker data that we got overnight out of China? I don't know. It's interesting.
I do know, but the Bloomberg Commodity Index, which is really good mathematics, has ebbed away from the boom that we saw over the last number of months. Yeah, lumber's there, and it's a U.S. story, I guess. It's well wrapped up in Canadian exports, imports, and all that. But the bottom line is commodities have come off the burner, and then there's Brent crude, $74.40. Does that tell me I'm going to get angst here? That's $4 a gallon, right?
That's a lot. Wow. I'm going to get teary-eyed, especially if you rent a car for higher expenses as well. Look, the gas price is a very different story than the rest of the commodity complex. And if you look at the rest of the commodity complex, it's telling you that perhaps we've reached peak inflation or peak growth expectations. It's sort of edifying that whole view, given some of the declines that we've seen.
I think, Romain, the last time I filled up a tank of gas, Brezhnev was the president of Russia.
You don't even have a driver's license, Tom.
What do you got, Romain, on the stock market?
All right, well, prices were a lot different then. Let's look at some of the individual movers here, Tom. Last night, Citigroup, Mark Mason, the CFO over there, was speaking at a conference here. He gave some guidance here with regards to the company's trading revenue, looking for a drop of about 30%. That's a little bit worse than what the street was looking for here. And, of course, that comes on the heels of those comments by Jamie Dimon over at J.P. Morgan, but also about a drop in trading revenue as well as some softness in investment banking revenue here. So investors starting to reassess assess sort of the trajectory for some of these banks. The shares had dropped pretty significantly heading into the close yesterday, down about 1.7%. They're fractionally higher here in the pre-market, so trying to claw back some of those losses. Oracle also came out with earnings. A lot of people focused on that company's cloud revenue. They were not happy. Not only did that revenue disappoint, but there was a lot of concern about how Oracle was classifying some of its sales into that cloud category. Some people saying the bucket may be a little bit too large here and not necessarily as discriminating as they would like to see. Oracle shares down 5%. Roblox also came out with some guidance here with regards to its business. Basically, you saw a drop in those net bookings in May from April. Those shares down 8% here in the pre-market. Flip up the board, just a few other quick names. You were talking about the commodity space just a second ago. Keep an eye on Freeport-McMoRan, Southern Copper, of course, the two big copper companies that are publicly traded here in the U.S. Copper prices, of course, down for a third straight day here, well below $10,000 right now based on London prices here. And some concerns here about some of that upward pressure that we saw in commodities, that may finally have peaked here. Kindred Biosciences also up higher here on the day, Tom, up 45%. A deal by Elanco, of course, the former Eli Lilly unit, buying the company. Of course, this is a pet medicine pet vaccine company.
It seems tangential, but with the news flow, the Fed, and what's going on in Geneva, it's good to hear a stock update as well. Romaine Bostic, thank you for that. If you're just joining us, we welcome all of you on Bloomberg Radio and Bloomberg Television. A really different morning here for us. We're focused on Geneva, Biden meeting with Putin at this time at the Villa Legrand. Lisa mentioning it could go on for many hours, many different topics to speak of. We spoke with our Josh Wingrove on the shores of Lake Geneva, Youssef Gamal al-Din on the other side of the lake at the Fairmont Hotel. And we'll have much more from Geneva through their afternoon and into the summer evening of Switzerland. Right now in the fixed income market, and as we mentioned, the stasis that's out there, Michael Collins joins us from PGIM as well. Michael, what is the symbolism of a 10-year yield locked at a 148.49, maybe a 1.50?
Yeah, Tom, maybe we're the only people that aren't surprised by the level of interest rates here. You know, we've been talking about peak rates maybe around 175 for this cycle. And I think the markets are finally realizing that and sniffing out the idea that, you know, this growth and this inflation is somewhat transitory. I mean, maybe not in the next 6 months, but in 2 and 3 years from now. And that's the important factor, right? What is the world going to look like in 2023, 4, and 5 when the Fed starts talking about hiking rates? And what does full normalization even mean, right? I think a lot of people assume they're going to hit that 2.5%, you know, pipe dream target when we think the funds rate is probably going to be in a range of 0 to 1 or 1.5 most of the next 10 years.
Michael, to that point, people talk about when this Fed is going to start talking about thinking about tapering, and then when they're actually going to do it. What's the Fed's ultimate goal with their bond purchases? I mean, are they going to ultimately buy no bonds every month, or is it tapering from $120 to $115 billion?
You know, I think they start that way. I think they go from 120, maybe they knock off 20 a quarter for a while, go to 100, 80, 60, 40, 20, 0. But I think, Lisa, they want to get to 0 before they start hiking. So let's say they start to taper early next year. Let's say it takes them a full year, that's all 2022. By early, mid 2023, now they have the room to start moving the Fed funds rate up. And that's not fully reflected in the dots, right? That's the big risk to the markets that everybody's focused on today is will that median dot move up today for 2023? And frankly, it probably should. And I would expect it to. I'd actually be surprised if a large majority of the FOMC members keep that 2023 Fed funds rate expectation at 0, right? It seems kind of impractical at this time. But again, the important point is where does it go to? How high does the funds rate get? And how long does it stay there over the long term? That's what drives the value in the 10-year rate and in longer-term interest
Michael,
rates.
is it feasible for the Federal Reserve to stop buying any bonds at all each month and not have a significant disruption in debt markets that have absolutely ballooned under their easy money policies?
Yeah, absolutely, right. I think the tantrum already happened, right? I mean, in middle of 2013, Lisa, we saw that big jump in rates, and it was the first time the market was dealing with this tapering process. And as we've seen throughout our careers, the market's always surprised by the first time an event happens. By the second time, they're used to it, and it gets priced in, and it's kind of a non-event. And I think this is going to be a big non-event in terms of the taper tantrum. So I think the Fed's doing a good job messaging it really slowly. And remember, what happens typically once the Fed stops buying bonds, once the Fed starts removing monetary accommodation, rates typically fall.
Michael Collins, I have to interrupt. We have a wonderful image from Geneva. This is a library of the Lefebvre family. It was gifted to the Lefebvre family, a good 40, 50 years ago. This is one of the jewels of books and bibliotheques in Europe. This is an exceptionally prestigious collection collected by the Favre family as the President of the United States and the the Russian Federation meet. To Mr. Biden's right as a Secretary of State, Mr. Blinken, and to Mr. Biden's left in a somewhat of a circle is Mr. Lavrov of Russia. In between them, a globe. And on a table, for those of you in radio, a modest level of flowers and, of course, the two flags behind. It is a photo opportunity with no audio before we get to the discussion, and I can suggest the body language. Again, the distinctions from Helsinki, whatever your political views, the distinctions from Helsinki are absolutely remarkable. Lisa, to be on common ground in Geneva, Switzerland is no surprise.
It's no surprise that they're on common ground. However, it may be a surprise if they come out with anything with respect to cybersecurity in particular. And Tom, this is a very important focus after the Colonial Pipeline and a host of other hacks, Russia being pinpointed as perhaps the genesis of some of these. And there is a question of what kind of resolution they could get to, and frankly, what kind of existential risk this poses to markets, this poses to society, the idea that cybersecurity is of ever-growing importance, Tom.
The press gathered here in this historic library. Romain, you know, what I think of is what is the common ground they can find? And maybe it's Syrian refugees or other themes, but I really want to identify where the common ground is. As Mr. Lavrov just looks at, there's your telltale signal, Romain. The leader of foreign policy for Russia just looked at his watch. Always a bad sign.
That's always a bad sign, particularly when you have 4 or 5 hours ahead of you. It's interesting, too. They're going to have this meeting, of course, with just these four now, and then, of course, later they'll have a little bit of a longer meeting with a broader staff here. You talk about common ground here. I think that part of the issue here, and we've heard this from a lot of guests here, is there really isn't a lot of area right now where they can find that common ground, at least not one that's going to satisfy President Putin here. I guess it really comes down to what the United States is willing to concede, if at all, anything right now, considering some of the rhetoric that we've already heard out of Biden.
And on radio and television, it comes down to body language. We go to our body language expert, Al Abramowitz, with a photographer in front of the camera.
Yes.
I don't know how we have that. But Mr. Biden, sitting as he has as vice president for years, relaxed, comfortable, his legs crossed. And Mr. Putin with a little different body language, Miss Abramowitz.
Yes, he's got the power pose, legs spread, leaning back. I mean, this is classic.
Which subway does he look like he's on? Which subway would you say?
It's sort of, please close your legs to allow the person next to you to sit down nicely without being interfered with. There is a question, though, if you really want my full body language interpretation, Joe Biden crossing his legs away from Vladimir Putin. So this very much perhaps going to speak to the relationship, Tom.
Well, some questions being bandied about. We really don't have audio. We don't have audio, Brett. Help me out here.
All right,
we really don't have a good
let's
audio.
go back to Michael Collins, this idea, just to wrap things up, Michael, this idea of what to expect from the Federal Reserve, this question of the fact that everyone's expecting them to make noise about tapering, and yet that taper tantrum very much front and center. A big concern here as we look to the incredible growth of market froth that people talk about. What is your number one base case scenario for what will happen and what could happen that could be disruptive today?
You know, well, we're just starting to enter, Lisa, this transition period. right? We've been in this uber accommodative period of monetary and fiscal stimulus, and that is ending on the fiscal side, and it's starting to end on the monetary side. And this really low vol we've seen, especially in the credit markets and even in the rates markets and equity markets to some extent, might start shifting, right? And I wouldn't be surprised over the next 6, 12, 18 months as the Fed tries to remove this accommodation, which isn't going to be easy, you will see market disruptions and some of this froth lead to more volatility.
Michael, I think we're going to leave it there. Michael Collins, thank you so much. We got so much going on today, Michael. We've got a reset here at our studios in New York. Romaine, the Fed meeting coming up. I mean, I guess we're going to get from diplomacy and onward and forward to the beginning of our 1:30 coverage as well. It'll be interesting to see where we are. Where are we going to be at the close this afternoon, Romaine?
1:30. Where we're going to be? It'll be interesting.
Be on set.
1:30 close. Yeah, we'll be on set. Tom, you can stick around too for the close. You know, you're always welcome.
He is actually going to be sticking around until the close, Romaine.
Or past the close. We have a show after that too, Tom.
Oh, good. It's called an all-dayer or something like that. Jan Hatzius of Goldman Sachs will join us in a bit. Stay with us from Geneva in New York. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. In Geneva today, Joe Biden and Vladimir Putin will come together for what could be 4 hours of meetings. Officials from both the U.S. and Russia are keeping expectations low in what has become an adversarial relationship. The two leaders will look to reach agreement on starting a new round of arms control talks. They also may take steps towards restoring diplomatic channels that were severed as relations plunged the last few years. Global bankers hoping to skip Hong Kong's tough quarantine regime will have to wait. Bloomberg's learned that bankers who have applied to take trips this month are being advised to postpone. The pause is a blow for fully vaccinated bankers looking to travel outside Hong Kong. Also for overseas executives wanting to avoid 3 weeks of quarantine in a hotel. Critics of U.S. technology giants are claiming victory. President Biden has named Lina Khan chairwoman of the Federal Trade Commission. Khan is one of the most prominent advocates of aggressive antitrust enforcement against big tech companies. Her appointment came hours after the Senate confirmed her for a seat on the FTC. In Louisiana, a federal judge has blocked the Biden administration's temporary ban on new oil and gas leases on public lands and offshore waters. It's a victory for the 13 Republican-led states that filed a legal challenge. The oil industry says that any long-term halt in leasing jeopardizes jobs and energy production. In Hawaii, tourism has roared back after being brought to a screaming halt by the pandemic. That's led to record prices and staff shortages. Room rates at luxury resorts are pushing $3,000 a night, in some cases 4 times what they were before. Unemployment hit 15% during the pandemic. Now hotels and restaurants in Hawaii have estimated 40,000 job openings. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Rishka Gupta. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Investment banking revenues are likely to be down in the low to mid single-digit range. We do see strong M&A performance, and we do feel good about the pipeline and the dialogue that we're having in investment banking.
Mark Mason, the Chief Financial Officer of Citigroup, Ms. Fraser's shop there, the House of Fraser built. And, we'll see for the quarter as well. We welcome all of you on radio and television. An extraordinary Wednesday. Certainly our Fed coverage beginning at 1:30 this afternoon. Of course, we've been in Geneva, Switzerland, where the two leaders are meeting right now behind closed doors with their secretaries of state and foreign ministers, if you will. They're at the Villa Lagrange. And it's sort of boring in Geneva as we wait to hear how those meetings came out. There will not be, I believe, a joint press conference, and that is very different than what we saw in Helsinki in 2018. Right now, always the same is David Wilson justifying the world of SPACs. I'm as lost on this as anybody else. David, do these have a track record that someone can brag about?
Well, not exactly. I mean, and actually, I want to focus in on something I found a couple days ago, specifically de-SPACs. So
this is part of the SPAC world.
Right. What we're talking about are companies that have gone public through special purpose acquisition companies. You think about Lordstown Motors or Nikola
so
or
they didn't do a
DraftKings.
Traditional IPO with a lunch at the Hilton. They did a de-SPAC.
That's right.
Got it.
And what we found, I mean, there is an index that tracks them, and it didn't rise as much going into February as the IPOX SPAC index, which, focuses in on those blank check companies that haven't completed deals or even made them. Mm-hmm. And then since then, that de-SPAC group has taken a bigger hit. As of yesterday, it was down 27% from its high in February. At one point, it was off as much as 45%. Whereas if you look at the SPACs with that IPOX index, down 23% from its peak, and it's kind of flatlined at this point.
Do we know? I mean, seriously, David, you and I are expert at this. You have what's called a red herring, and you have a prospectus, and you go. The first thing you do, you read them from back to front, folks. You go in the back and see who's on the board, and then you go to share dilution and the rest of it. Did we know any of that for these de-SPACs?
Well, we really didn't, in a sense, because, first you had the blank check company, and it had to do the red herring, but then they went ahead and made the deal with, whatever private company they chose to, or, more than one, actually, in the case of DraftKings, which it combined with another business. And then you get, the merged company trading. So, that's sort of a different route, clearly, than the traditional initial public offering.
So, Dave, help me argue against myself earlier when I was talking about froth in the markets and how these pockets might get the Fed's concern as a potential financial stability risk going forward. How much has the froth come off the top in certain areas? I'm thinking of SPACs and de-SPACs and A, B, and C ones as well, if those exist. Also, there is a question of the fact that we're seeing a rotation out of cyclicals with underperformance of some of the big banks and people going back to big tech. How much does this sort of edify conviction that we're not at the top, that perhaps there is still some speculation or at least skepticism around the rally?
Well, when you put it all together, I mean, it's clear the skepticism is there. If you focus on the SPACs and the companies taken public by SPACs, I mean, they really did peak back in February, and they've been down now as a group for 4 months. And then you look at the SPACs being rolled out, and you just don't have the numbers that you did, 4, 5, 6 months ago. So at least in that piece of the market, you have had sort of a backing away from more speculative speculative elements. Now, can you say it's happening more broadly? I mean, that poses a bigger question.
We're saying the spec frenzy fades. Come on, the spec frenzy's collapsed, right?
It's collapsed. You remember when we used to call these reverse mergers? Dave, so
Yes,
I guess when they get a better PR here, and we can sort of change SPACs to some other acronym that will sort of woo people. But in all seriousness, Dave, there was a general sense here that there were sort of bigger players this time around in this space that were actually going after, I guess, quote unquote, more legitimate companies here. Is that not the case anymore? Have all those people sort of faded away?
Well, not necessarily that they've faded away. It's that they've done a number of deals. And, considering this has been going on for several months, you could argue that it gets harder to find what you might call remain legitimate targets. So, when you put that all together, I mean, you can sort of understand why the bloom is a bit off the rose, shall we say, when it comes to SPACs and the companies that they combine with.
David Wilson, thank you so much. Greatly appreciate it this morning on SPACs. Let's bring it back, folks, if we can, to the elephant in the room, which is inflation and the idea of gas. And I guess elites are saying, Lisa, that $74 a barrel really shouldn't affect monetary policy. I just don't buy it.
Well, the question isn't whether that in and of itself will affect monetary policy. There is a question of what this does as an input price. The fact that we've seen the commodity prices increase, is that inflationary or longer term disinflationary because people buy less of it, as you were saying? There is that supply-demand dynamic. And frankly, it seems like so far the Fed has shrugged off the commodity boom that we've seen as simply a transitory
Well, within the scope of 10 years, it's not a commodity boom. It's a nice commodity recovery there, Romaine. But on a political basis, and Jerome Powell, Romaine, has been astutely political, know, even defining a new route for the Fed, a new route for the chairman at least. And this is a guy that's got to confront PPI yesterday, CPI a couple days before, and boom, $4 a gallon.
He's certainly got to address it, but I do think there's something a little bit different here, and I think it's something we need to kind of address, which is the idea that this is very sort of regional, not only here in the U.S., but regional really across the globe here. And I think when you start talking about whether the Fed should react to some of these price changes, you have to look at it much more and how those prices are feeding into things globally here. And I just don't think you're seeing it just yet.
Well, and also I will just say this, perhaps not for Fed Chair Jay Powell as much as President Biden, because those gas prices actually affect the political regime and the sort of impression of inflation much more than perhaps from a monetary policy standpoint. But how much does President Biden lose support for some of his stimulus efforts and raise concerns about inflation as those oil prices, gas prices go higher? And how much is that going to be reflected in the University of Michigan study?
Lisa, it's cruel and unusual today. I mean, this would never happen if Farrow was here. I mean, come on. Twitter's making fun of my French.
That's cruel. That might be cruel, but it's not unusual, and it might be warranted. Let's hear you speak
it's
French.
Just brutal. No, mais non.
No. Mais non.
I only speak French with Francine, and usually I have to have something in my hand.
Well, it's transitory.
How's your German?
Can I point something else out that I find really interesting?
Please.
5-year Greek yields are negative.
Wow.
Do you remember when people were worried about?
Thank you.
Do you remember when people worry about some sort of sovereign debt crisis? Negative yields for 5 years in Greece, of all places. We were talking about complete insolvency. Talk about a reversal of fortunes and how much of this
I had no idea.
Purely ECB driven.
That happened a couple
See
years
how
ago.
she can do that, Romaine? She can bring a bar
here,
conversation right down to a complete halt. 5-year Greek yields are negative.
Yeah.
I try. Raising the party.
Somebody just drove off the Garden State Parkway listening to that as well. We welcome all of you on radio and television on this historic Wednesday, a Fed meeting. Our coverage on radio and television at 1:30. Brian Levitt with us, Jan Hatzius as well. Those are good conversations. Good morning.
Chinese people have shopped at wet markets or mom-pop stores for decades, and now e-commerce companies are trying to change this habit. Those including regional players like Shopee or Lazada or local startups Tiki have been building loyalty and trust by providing Vietnamese with services that are common in developed economies but very new to this country.
Mình chỉ cần ngồi ở một chỗ thôi và lên một cái trang web chẳng hạn thì mình có thể tìm được là rất nhiều những cái mặt hàng ở trên đó. Thứ hai nữa là về cái tốc độ giao hàng thì bây giờ cũng đã nhanh hơn rất là nhiều rồi, thậm chí là có những cái mình có thể nhận sau 2 tiếng như Tiki Now chẳng hạn.
The epidemic has given digital retail a boost, with more Vietnamese buying everything from food to electronics online.
Còn một cái nữa đó là tại vì cũng đang dịch ấy, thế nên là nếu mà mua hàng online thì sẽ an toàn hơn cho tất cả mọi người, bởi vì là mình sẽ không cần phải ra ngoài và tiếp xúc với nhiều người.
The country's e-commerce is expected to reach 29 billion in 4 years, from 7 billion last year. The government is also encouraging this sector with target of online shopping to account for 10% of Vietnam's retail sales by 2025.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television. Wednesday, the Fed decides. Will the Fed react to accelerating inflation concerns? Are members eyeing an earlier rate increase? Coverage begins at 1:30 p.m. on Bloomberg Television and Radio.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
You'll see more workers re-enter the labor market, and they're actually entering a labor market that is very hot right now.
What is the Fed going to do, and how does that play into everything else? It has been a Fed-driven market.
There is a lag to the credit cycle that's likely inherent in what the Fed is doing.
If there's anything that worries me right now about inflation, it's not even what's in the data, it's what's in expectations.
The Fed is managing a supply shock, a big aggregate supply shock. We didn't see it for about 14 months.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
A historic day in Geneva, a historic day in Washington, D.C. Good morning. This is Bloomberg Surveillance on Bloomberg Radio, Bloomberg Television. Tom Keene, Jonathan Ferro, Lisa Abramowitz, John Ferro out, Romaine Bostick very much in. And Tom, the focus very much on the Federal Reserve, even as President Biden engages in diplomacy throughout Europe. The question it really is domestic, which is how hot will the Fed allow inflation to run?
The domestic GDP recalculation, you're absolutely dead on, Lisa. At least it's one part, the GDP numbers, and also what it means for earnings of corporations into the mystery of Q3. Brian Levitt with us, Jan Hatzius with us as well in this hour. A really strong setup for the Fed meeting this afternoon.
Tom, I am struggling to understand the market's wish with respect to the Fed's messaging today. At one hand, they want the Fed to remain ultra dovish because that's accommodative. On the other, a growing concern of financial stability risks. The longer the Fed waits, the more of a policy error they will commit later.
Well, they look at the statistics and, the policy error risk is always there, but it comes down to a word from another time and place, which is overshoot. And I really have trouble thinking about an overshoot with the millions unemployed in America still.
And that's the reason why increasingly markets are coming around to the view, Romaine, that indeed inflation will remain lower for longer. Once we get this pop, it will revert back to a lower normal regime, and you're seeing that rotation out of the cyclicals back into the mainstay of big tech, and that seems to be continuing today.
Yeah, I mean, there's no reason to think. I mean, if you're invested in this market, there's no reason to think, or at least no reason to really make any sort of meaningful bet that the Fed is going to change course anytime soon here. And so why wouldn't you stay invested? Why wouldn't you sort of take advantage of the drop in yields? Why wouldn't you necessarily take advantage of some of the valuations out there, which of course don't look now as rich if you do get a Fed that stays on pause?
And while we focus on Washington, D.C. right now, very much front and center, Vladimir Putin, President Biden meeting for the first time since President Biden came to the helm of the presidency of the United States. A very different tone, Tom, as you've been pointing out, between this and the meeting in 2018. And yet I am struck by the lack of focus in markets, the idea that perhaps there could be something significant here one way or another, having to do with cybersecurity, having to do with tensions that have been rising.
The lack of focus in markets to this, to Geneva?
They have not been responding to this. There's not been a market movement in terms of this particular action, Tom.
But I would suggest someone, I mean, I defer to, say, Dr. Morse at Citigroup or Dr. Curry over at Goldman Sachs. The idea here of how it folds into oil is always part of the calculus as well. The single point here on a Fed day, the real yield down to a negative 0.91. To me, that is newsworthy. And also, of course, Brent crude. When do we get to 75 a barrel? Good morning, Christopher Verone at Strategas, who believes the extrapolation is out to $80 a barrel. How many people are really ready for that? On the data front, red and green on the screen. Bitcoin, well, under 40,000 now, make it 39,000. And the 10-year yield, of course, is my big statistic to the Fed show, 1.4871%. In New York, we must frame the vista of Geneva. Geneva, of course, is so much a part of France, mostly surrounded by France. You go up the northwest shore into Germanic Switzerland as well, off in the distance to the north, the mountains. And if you stand on the southern shore of Lake Geneva, you can look behind one of the great rose gardens of the world. That is Lagrange. Our Maria Tadeo has tough duty today at Lagrange, looking back off into the distance to the building where the two world leaders meet. Maria, I know you were stuck on the motorcade as well and all the pomp and circumstance of Geneva. Let me start with Basic Civics 101. Is Russia part of Europe?
Part of Europe. This is has been a question for, I would argue, 100 years. Geographically it is, but the politics are very different, and they have been for the past 60 years. If you go back to the Soviet Union, they would tell you we're not really Europeans. We're creating our own different system. So this has always been the tension with Russia. Do you look at it geographically, in which case this is a European country and it's a big country that you can't ignore, or do you focus on the politics, which means that Russia is very different to the rest of Europe, is very different from your Western liberal democracies here in Europe.
Maria, what's the significance of a 4 or 5 hour meeting between Vladimir Putin and President Biden? The idea here is that the Kremlin did indicate it would be that long.
Yeah, well, they did say it's going to be 4 to 5 hours. They did say, the Russians in this case, that there's a lot to talk about, and it's always better to do it in person. Vladimir Putin, who, by the way, today there was no power move from Vladimir Putin. He was on time. His security was much smaller than that of the U.S. president, and he had a handshake, smiles all over, saying, I'm happy we're doing this in person. As you said, they're stuck in this building right behind me, Villa Lagrange. We're expecting a 4-hour meeting. A lot of things need to go and happen here. The significance, I would say, it shows that, well, there's a lot on the agenda, but also for the U.S. delegation, this has been such an exhausting trip. Vladimir Putin got here today. President Biden has been on the road since Friday. You can imagine that the U.S. delegation is really extremely exhausted here, perhaps playing on that time element. Nonetheless, the Americans say they're really ready to go for 4 or 5 hours, and that's what it takes.
Yeah, Maria, maybe give us some insight here into what Biden may or may not have learned from some of his European counterparts over the last few days, and how he should go into this meeting, what Europe itself might be willing to concede or not concede, and how that's going to shape Biden's negotiation here today.
Look, I think first of all, when you speak about Europe and their position to Russia is very different. When you look at the position from Germany, it's very different to that of Emmanuel Macron in France, who says we can't ignore Russia. The reality is it's so close to Europe that we need to learn how to work with the Russians. Now, when he spoke with the Baltic leaders, and it's interesting that President Biden did take the time to speak with the Polish authorities, with the Lithuanians. He also spoke about Ukraine. They're worried about the physicality. You know, Russia is right next to their border. They worry about Russia moving in the way it did with Crimea. They worry about Russia amassing all of those troops into the eastern border. So that is something where the Europeans cannot concede. You know, that physical border needs to stay the way it is, and they want those troops to back off from the eastern border in Europe.
Maria Tadeo, thank you so much from the shores of Lake Geneva this morning. Right now with global strategy off of this moment and certainly off the Fed moment this afternoon, we're thrilled that Brian Levitt could join us. He's with Invesco and their global market strategist. Brian, just a perfect day to speak to you as well. How does Invesco reset at mid-year?
I don't know if we necessarily reset. I mean, I think the reality is it's an economy that's starting to move from recovery into an expansion phase. So from the large story, a better economic backdrop, a Fed that's on hold, it's still an environment that you want to favor stocks over bonds, you want to favor credit over treasuries. I think to the extent that you reset in an expansion phase is that you start to see more of the growth-oriented parts of the market participate again. And so we had this pretty big value move from the fall of last year, the beginning of this year. And I think that continues in an improving economic backdrop. But you tend to see in the expansion phase, your big growth stocks also start to perform quite well.
Brian, what will be a bigger surprise to markets today if the Fed does not bring forward their rate hike expectations based on the dots to 2023, or if the Fed does?
I think a bigger surprise to the market would be if they do bring it forward. I think that we're still going to be talking about a very gradual path of normalization. And so my expectation from the Fed is to focus more on what they're going to do with their asset purchases. I think the message is going to be we're going to start talking about tapering asset purchases. At some point, we'll bring forward. At some point, we'll move towards where rate expectations are going to be. But the reality is this is a Fed that's telegraphed this pretty well, and I think so far has done quite a good job, particularly if you look at inflation expectations 3 and 5 year out, which are very much near their comfort zone. And so I think the Fed's going to continue on a gradual path. It's a supportive backdrop for markets. And, you know, investors should note even these early moves in Fed policy tend to not be what ends a cycle. They may create some volatility along the way, but it's really the last rate hikes that matter, and we're a long ways away from that.
Brian, where do you see us right now in the economic cycle here, and particularly as it sort of dovetails with the positioning that we've seen in equity markets, that rotation to cyclicals, and now over the past couple of weeks away from cyclicals?
Well, that's a critical question, and I would say that we're still very early in the economic cycle. And the reason I say that, try and say that forcefully, is because I hear a lot of questions of, is it ending soon? Is there too much excess? Is it too inflationary? Remember, we had a disastrous outcome. We're digging out of that outcome. If you look at it from a real GDP perspective, we're getting back to where we were at the end of 2019. But if you look at past cycles in the United States, you find that cycles have lasted on average around 7 years with a 25% cumulative increase in real GDP. So this idea that we're a year in and only just getting back to where we otherwise would have been suggests it's very early in the cycle. Now, that to me favors risk assets until it looks like the economy is going to roll over. The next question is directionally, where are we? We just had a great recovery phase with all the implications for markets. Now we move into a more expansion phase. And in an expansion phase, you shouldn't expect interest rates up as much as they were. I think the dollar is still somewhat weaker. Commodities should continue to do well. Equity should do well. Within equities, again, shifting more to growth stocks.
I got about 8 ways to go here, Brian. I hate having you on for you're on for 45 minutes today. We need to get you on for 3 or 4 hours here. But, I'm going to go here to what you just said, which is horse and cart. Is a weak dollar the horse, or is a weak dollar the cart?
Well, the weak dollar is a byproduct of we're coming out of a very strong dollar environment. We're now in an environment where growth around the world may be a bit more synchronized than it was in the aftermath of the global financial crisis. There's been a lot of policy support in the United States, and the Fed's telling us that they're going to be on hold. So whether it's a horse or a cart, I think what you're asking is, does that start to unlock some of the value that exists around the world? And I suspect that it does. The challenge that investors had investing internationally over the last number of years has been a strong dollar environment. To the extent that the Fed's on hold, policy's relatively accommodative, and the rest of the world starts to participate more in this expansion, then the dollar should be stable to weaker, and international markets should perform well.
Brian Levitt, thank you so much. With Invesco today, just really well timed to talk to him on a really interesting day. I look, Lisa Abramowitz, at the library scene, so different than this is. To me, it's the starkest difference of everything we've seen on this 7-day tour of Biden there calmly and Mr. Putin there stoically, maybe their two foreign ministers and the Lafave collection. Okay, great. But does the calmness of that scene fold over to a calmness of greater global GDP? I don't know if I can make that leap.
It goes to a calmness between the U.S. and its allies, the idea of a return to the past normal, sort of back to the future in terms of international relations. That's what this trip has been about.
Yeah, I like that.
And that has given certainly a certain confidence that at least policy is a bit more predictable than it used to be.
Romaine, the body language is just stunning. I mean, it's like me and John Farrow in a bar. I mean, it's like, really?
Who's sitting with their legs spread?
Is what I want to know.
Well, yeah, moving on.
Yeah, I mean, look, there'll be a lot of people, of course, parsing the body
Saturday Night
language.
Live is going to kill this.
Wonderful.
You want to volunteer a preview of that?
We're going to get your thoughts a little bit later, too, at 2:30. We can get the body language of Mr. Powell as well.
It's going to be interesting. We thank all of you for joining us. We continue. Terrence Haynes will join us with Pangea. We can talk about what Mr. Biden returns to in Washington. Also, the return of Jan Hatzius with the perspective of his Goldman Sachs, this historic Fed day. Stay with us with, futures. The futures are trading. This is Bloomberg. Good morning.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between governments and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
crypto is a nuanced issue, and it's possible the U.S. gets crypto wrong.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The agreement we have found now really opens a new chapter in our relationship, because we move from litigation to cooperation on aircraft, and that after almost 20 years of disputes.
The defense expert from Germany, Ursula von der Leyen there, the European Commission president, very visible in the NATO meetings and the EU meetings with President Biden. Right now invisible at the Lagrange in Geneva is the President of the United States and the President of the Republic Federation, Mr. Putin. They are meeting privately after the images we saw earlier of them with their foreign ministers, Mr. Blinken and Mr. Lavrov, as well. The President will get on the plane in Geneva, Air Force One, and he will, leaving on a jet plane, come back. Always a president returns. We thought we would take time with Terry Haynes of Pangea Policy to talk about the return that Mr. Biden will descend into. Terry Haynes, what is the level of gridlock that will greet the president when he gets inside the Beltway?
Oh, I think the level of gridlock is about the same as it always is, and frankly, less than most people think. You know, there is. My view of Washington, very simply and shortly, is that there aren't two political parties; there are four factions. If the fringes, in other words, the progressive left and the conservative right, are driving the agenda, very little happens. If the centrists are driving the agenda, things happen. So you've seen COVID, you've seen infrastructure. We will have a big spending fight and a debt ceiling fight this fall, where all of which I think the centrists are likelier than not to win.
Let's go to the Senate on infrastructure. And I believe we have centrist Republicans and Democrats trying to drive forward to a centrist president as well. Are you optimistic the centrists can take the high ground on infrastructure?
Yeah, well, I'm optimistic that they're actually trying to take that. I'm non-consensus 60% right now that you get a likely deal by the end of June, July 4th, around there. Bottom line is, you know, everybody's still around the poker table. There's continuing negotiations, new proposals, as we've talked. The negotiating differences continue to narrow. They're now about $500 billion apart total, and about $300 billion in new spending. There's progress, but not too much detail, and nobody's rejecting outright. So, you know, things are continuing in a positive direction, but I'll give you 40% that they fall apart.
President Biden has been pretty clear that even if he doesn't have bipartisan support in Congress, he does have it among the population, that people do support his proposal for infrastructure spending. How does $4 oil affect that? The idea that when people go to the pump, they see very real inflation, albeit perhaps not pervasive, across all of their purchases.
I think the administration's view of public support is a little bit overblown. But you know, you expect that out of administrations. They're going to put the best foot on it regardless. $4 oil and increasing inflation, or at least the perception of inflation, definitely draws a dent in that. The good news for the president is that he's above water in public opinion polls on approval. The bad news is he's not much above water in approval. So things like $4 oil or some other exogenous shock or continued inflation, all I think contributes to some erosion in his standing, and paradoxically probably drive him to do a little bit more of a bipartisan deal, because frankly he won't have the runway with the public that he might have just going it alone with Democrats.
Just to dovetail this conversation with the Federal Reserve and policy there, given that infrastructure spending feeds into some of the inflationary outlook, what is the political ramifications of higher inflation expectations? We have not had this for decades because of the low-inflation environment. Is it becoming an increasing political liability?
Yeah, I think it is, broadly speaking. It is becoming an increasing political liability. And exactly why I said inflation, or the perception of it. The White House says, and I think quite properly, that that year on year is being measured from a false floor. That inflation is actually a lot less than it was because you're measuring a year ago at kind of the bottom of the pandemic economy. But at the same time, it's how people perceive it that matters, and there's already a lot of squawking about that. So that's a real problem. And the administration has been putting an awful lot of pressure on the Fed in ways that also we haven't seen for decades. In order to try to hold things off, you've got Yellen putting pressure on him, former Fed officials, all kinds of things, and the G7 itself. Was a desire to keep domestic spending up.
We'll talk a little bit more about the perceptions here, because when we talk about perceptions of the economy amongst regular folks on the ground here, you'll hear a lot of anecdotal evidence about the higher cost of whether it's gas or food, the difficulty in finding a job that pays a wage that folks think that they should have here. So even if we start to see the numbers, actual economic data shows the improvement here that all the economists and the high-level thinkers want to see here. Is that going to translate down to a level where people are going to say, I'm better off now under this administration than I was under the previous administration, or whatever the next administration may be vying for down the road?
Romaine, I think it's going to take months to get there. Let's assume that. Let's take your hypothetical at face value, and let's say that case can be made today. That will take months to trickle through, and months in which the economy is just starting to reopen. People are starting to travel. They're spending money differently than they did, and probably spending more, since we know the savings rate increased. So they're probably spending more than they have, and they're going to experience a lot of the high gas prices, increased prices here, there, and everywhere. And they're not going to feel like things are returning to normal, and that the inflation scare is subsiding. That's number one. Number two, there's an expectation, I think, also that the administration was going to and should have handled COVID properly and well. I think people think that so far. But I think it's a mistake for any politician to assume that that dealing with that basic and important matter translates into goodwill across the board on everything else. They can think you handled one thing well and other things badly at the same time.
Terry, thank you so much. Terry Haynes with us on the politics of the moment. He's with Pangea Policy in Washington. Guys, I think we got to look at the correlations of the data right now. And Lisa, I'm going to go to the real yield. I'm sorry, negative 0.91 speaks volumes. This is a greater negative statistic over the last number of days.
And this is a market that thinks the Fed is going to remain as uber dovish as it possibly can, maintaining some of those bond purchases, even as the inflationary pressures start to pick up. You see a similar kind of behavior, Romaine, in the equity markets. The NASDAQ up, even though the S&P is a little bit lower. I mean, these movements are hardly something you can call a move at all. But still, interesting, that rotation continuing.
Absolutely. I mean, that 42.35 roughly here right now on S&P futures, that's basically been landlocked now where we've been for the past couple of weeks. You do sort of wonder about some of the softness that we've been seeing in the dollar as well here. It's tried to sort of reassert itself a little bit, but now kind of pulling back in the opposite direction as we head towards this afternoon.
Romaine, thank you so much. Romaine Bostic with us, and we will continue. Widely anticipated coming up in moments. Jan Hatzius of Goldman Sachs here. Some really interesting perspective here on the time continuum forward to 2023. Please stay with us today from Geneva and New York. This is Bloomberg.
We've sadly lost 12,000 premises across the sector as a whole. We lost about 330,000 additional staff in terms of headcount through the pandemic. It is a gradual road to recovery, but I am feeling much more optimistic. The positive response we've seen from consumers in returning to eating and drinking out, even outside, has been very welcome. And of course, we're not out of the woods yet, because we know that it's, about 20% will struggle to reopen with social distancing restrictions, and every day that they are closed makes it less likely that they'll be able to reopen. So I think you will see continued business failures within hospitality over the course of the next year. Well, I think the government support has been unprecedented. Equally unprecedented is the hit that hospitality has taken. So we do need the government to look at a solution on rents, which is going to be critical to recovery, a recapitalization strategy to tackle the levels of debt that these businesses are going to come out of the pandemic with. So this government support, fantastic, has allowed us to maintain a large number of staff that we would have undoubtedly lost along the way had we not had furlough. But furlough actually is costing the businesses to implement at the moment, and the costs of staying closed, the industry is burning through £500 million a month in ongoing costs.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Again.
Broadway's returning June.
Have you bought tickets?
It's busted out.
You've got more time here.
Commodities are up.
Keep going.
To the moon.
No. Beautiful.
Bloomberg Surveillance, weekday mornings on Bloomberg Television and Radio.
Surveillance, a really interesting day here with economic data now, the Fed later, and of course the two world leaders meeting in Geneva. Futures at -1, and the yield is real simple. The yield 1.4871%. Michael McKee with breaking news.
Well, good morning, Tom. We're looking at housing starts this morning that come in a little bit weaker than forecast, 1,572,000 annual rate. That is lower than the 1.63 rate that we had expected, or that economists had expected. Building permits come in soft as well, 1,681,000, down from a 1,730,000 expectation. On a month-over-month basis, the building permits are down by 3%. Housing starts rise by 3.6%, but that's lower than the 3.9% that was forecast. So it does appear that we are seeing still some bottlenecks in the housing industry, because demand has remained very strong. Let me also quickly mention import prices up 1.1% the last month. So for the year, they're running 11.3%, which is significantly higher than the 10.6% last month.
Mike, both of these hint at the commodity story, the idea that import prices are increasing as commodity prices rise. And is there perhaps the hint that housing starts are slowing as a result of elevated lumber prices? And we were talking about this earlier with respect to why lumber prices are falling. Could this be affecting demand because it's just so much more expensive to build a home, Mike?
Doesn't appear to be affecting demand because builders have backlogs. The question is, what does it cost, and does that contribute to inflation? Interestingly, we have seen, of course, the fact that the housing price increases over the past year have not fed into CPI, probably because of the way they calculate it, but that could happen. That's something to keep an eye on. The other thing about that, though, is lumber prices and copper prices have both rolled over, and if that continues, that would help a lot. It looks like at this point, the Chinese decision yesterday is going to put some additional pressure on the copper market. The import price is probably driven a certain amount by oil. It is the highest since 2011.
Michael, Las Vegas has immense bets on this. What is the likelihood you'll get the first question today at the Fed meeting?
I would bet against me.
You'd bet against me. There is a tradition, folks. They wait for the heavyweight to come in at the end of the questions. Michael McKee, of course, will ask important questions with a selected gathering with Chairman Powell here this afternoon. Our coverage beginning at 1:30. Long ago and far away, and Bill Dudley has been on fire recently as a former president of the New York Fed. There was Dudley and McKelvey at Goldman Sachs, and they had this guy out of Germany via Wisconsin, Madison, and Oxford, and I was like, okay. And then he stopped the U.S. market economy world with mortgage equity withdrawal. That's how he first came to my attention. Jan Atzius has gone on to acclaim at Goldman Sachs, not only running economics, but providing a view over investment research for the acclaimed firm. And we're thrilled he could join us today in our studios. Jan, I want to go right to the time continuum. Our Matt Bessler's really looking this as well. The x-axis out for any Fed chairman is always a challenge. What's the challenge for Chairman Powell right now as he looks out to 2023?
Well, I think there is a number of decisions that have to be made before that. When do they start to taper QE? They've said that they are not going to hike rates until that process has concluded, or at least strongly implied it. And that's also going to then determine what do you think when rates are going to start rising. At the moment, as you know, the dot plot is basically saying no hikes until the end of 2023, but that's going to be on the table today, and I think it's a close call. Our best guess is that they stick with what they're with the message they're sending, but it could move forward.
There's your exclusive banner, folks. Hatzius predicts boring meeting. Okay, forget about that. It's Latin. It's ex ante. It's ex post. After the fact. I'm Matt Bessler with a really important question. Maybe he'll be in the press conference as well. Matt Bessler making very, very clear that this is about the present base effect analysis versus the truly ex post inflation expectation game. Which is it? Is this analysis of base effect dynamics, or is it truly traditional Fed analysis of inflation expectations?
You mean what happens in 23?
What happens in 23? The mystery of how we get out there to this in this new theory.
I think that's going to be driven more by what you think about how tight the labor market is, and really the traditional stuff. The near-term inflation increase is partly base effect, it's partly reopening effects, and of course it's these bottlenecks which Michael just talked about.
Jan, before we get into just the granularity of inflation, I want to understand the granularity of tapering. People talk about it as though it's a monolith, and yet is it, as Michael Collins said, the Fed getting to zero, getting to no bond purchases at all before they hike rates?
That's our assumption. I mean, they haven't said that explicitly, but I would guess that they're going to get to zero, and then there will be some time that will elapse before they start moving rates higher, and obviously that's going to depend on the data. But I would be surprised, though not maybe shocked, but surprised if they were still planning to buy, say, $20 or $40 billion per month in perpetuity. It's not our expectation.
So, Jan, I guess I'm kind of struggling with the idea that they're buying, the Federal Reserve is buying more than $1 trillion a year in its base case for continuing monetary accommodation as it currently is laid out. Its balance sheet currently almost $8 trillion. It removes this accommodation. Do you really see that it's feasible for it to do so without disrupting financial markets in a way that stymies its effort to ever raise rates?
I think there could certainly be some hiccups, especially if you're also seeing a slowdown in growth next year that's driven by the removal of some of the fiscal support. I do think that 2022 is going to be substantially slower on a fourth quarter to fourth quarter basis. We think basically 2.5% after a real banner year of 7.7% Q4 to Q4 in 2021. And so if that interacts with an environment in which the Fed is tapering bond purchases, I think that could result in a growth scare. Yes, I do think we probably are going to have some nervousness in that environment.
Well, let's talk a little bit more about some of the fiscal policies here, Jan, because, I mean, obviously there's a multi-trillion-dollar proposal down in Washington sitting on someone's desk. It may not go anywhere, or it may end up being a lot smaller than, of course, what the president proposed. But I'm wondering how much of that has to factor in right now to the glide path that the Fed is trying to chart out here.
So I think the baseline should be that something gets passed, maybe not the whole thing, but something large in terms of the headline number. But I think the key point is that this is a very different type of spending program relative to the American Rescue Plan Act. That was very front-loaded, $1.9 trillion, basically over a year or a little over a year, whereas this plan is going to be over 10 years. So whatever number you see, you have to divide them by 10. And that's still going to mean a significant amount of fiscal drag in 2022.
Right, that's a great point. It also means, of course, there's still got to be some additional Treasury issuance. It does mean, of course, there's a potential here for changes in tax policy as well, Jan. How do you factor that in?
I think that strengthens that point, that it's not going to be as stimulative, because, as you say, a significant part of the spending increase is going to be offset by tax increases. And, I think it'll be somewhat stimulative, but much less so than the headline number, both because of the 10-year horizon and because of the tax increases.
On Bloomberg Radio and Bloomberg Television Worldwide, Jan Hatzius with us with Goldman Sachs, our chief economist and head of investment research on this day before an important Fed meeting. Jan, your statistic there on the slowing of the American economy under 3% is really, really important. I would suggest a huge body of Americans are not prepared for that. If we slow from a boom to a Hatzius under 3% economy, we've never done that before. I mean, you and I remember we've studied the 50s, the early 50s deflation. Do you anticipate such a shock there in GDP dynamics that we could get to a deflationary dynamic that Eisenhower knew?
I don't view it so negatively. I mean, right now, we're still a long ways away from full employment. There's still a lot of slack in the labor market, despite the near-term labor supply issues. And strong growth this year is going to get us to something like full employment by 2022. At that point, you want to see slower growth, because otherwise the economy is going to overheat. You do have to worry a lot more about persistent inflation. And ultimately, that's not going to be a good environment. So I think you'll need to see a slowdown. I don't worry about deflation, but at the same time, I think the current inflation is probably largely transitory.
And so much as a new economy and the overlay of technology on it, we partition it into goods dynamics inflation and service dynamic inflation. Parse the difference now as we look at a service sector dominant and goods producing as well. Those inflation dynamics for our inflation expectations.
Well, I think the surprise in 2021 really has been on the goods side. The acceleration in COVID-sensitive sectors, that was very much expected. The base effects were very much expected. I think 6 months ago, most economists would have been really surprised with the enormous surge in used car prices and other durable goods like that. And that's really been the key driver. They are outliers relative to the overall distribution of prices. Core PCE is above 3%, probably will be above 3% for most of the rest of the year. But if you look at trimmed mean measures or median measures that really capture more the distribution of prices, those are still pretty well behaved. So to me, that screams transitory.
What about wages, though? Wages have been going up in particular sectors that have been more in demand, especially with the reopening. How sticky is that?
Well, I think we've seen wage increases, especially at the bottom end of the pay scale, leisure and hospitality in particular. I think the evidence suggests that the remaining COVID effects around fear of the pandemic and maybe some childcare issues, but also the $300 unemployment top-up have weighed on labor supply. That's going to be true probably for a few months longer. But in the fall, I think we'll see a big increase in labor supply. And I think that's also probably going to lead to reduced wage increases in some of these sectors.
Jan, we got a headline that the Fed's Jay Powell is planning to discuss the pandemic emergency lending program as well as the economic recovery at a House hearing on June 22nd. I am wondering about how concerned you are about the increasingly political nature of the Federal Reserve, not saying that they are political, but that they're getting increasing pressure to be political to finance the U.S. debt and deficit, especially as the U.S. plans to increase its deficit by so much.
I think there's always been political pressure and congressional oversight and, obviously jawboning of Fed officials. I mean, if you go back to President Trump, there was a lot more overt pressure on the Fed than what we're seeing now. I think now we're more in a more normal historical environment where there was always always hearings like this and strong opinions expressed. But in the end, I think the Fed is committed to the mandate, and the mandate obviously looks somewhat different now after the changes of last summer. Yeah, but I don't think it's dramatically different from where we've been over the long term.
But to Lisa's point as well, though, sort of the shift in that mandate, or at least the tweaking of it, does sort of open the door for greater criticism here. As much as the Fed will, of course, try to remain independent and preserve the perceptions of independence here, does the political landscape shift enough here, Jan, where maybe that undermines some of the messaging?
Look, I think the way that the mandate is being interpreted looks a little different. I think for good reasons, it does make sense to try to average 2%. I don't think 1.7%, which was the average before, is dramatically different from 2%. So I don't think it's a massive shift. But I do think that the changes that took place last summer at Jackson Hole, do make sense. Is that going to be something that will, maybe raise more questions, and including questions from policymakers and from elected officials? Probably, but I do think the mandate is reasonably clear, and we should over time find out more about exactly how it gets interpreted.
Jan Hatzius, thank you for joining us today. Greatly appreciate it with Goldman Sachs. Very generous conversation here before this Fed.
You missed the lead, Tom.
This afternoon.
He put a tie on for the first time since the pandemic, just for us.
Oh, just for you. First time in 15 months.
First time. Very
How does it
good.
feel?
Very good.
Feels a little tight, but I'm sure I'll get used to it.
Shanali Bassick just emails in and says, "Is this a Solomon mandate?" I mean, Goldman Sachs is all back to their offices downtown. Is there a tie mandate as well?
Not a tie mandate.
There's not a tie mandate. We'll see. We're trying to.
So I think I'll be one of the few when I go back to the office.
Very good. Jan Hatzius, thank you so much for joining us. A real sign for us at the end of this pandemic. Lisa, you've got a very important guest to frame forward the markets.
Yeah, we've been talking about the balance of risks when it comes to jobs. Let's talk about the balance of risks when it talks about financial stability and low yields. Howard Marks of Oak Tree Capital, co-chair and co-founder, joining us. He has had some heated things to say about where financial conditions are and the potential for an investor, the potential for mistakes, especially how low the costs are to borrow.
After this interview, Jan Hatzius will be on the phone with Jeff Curry going, "Jeff, what does $74.41 Brent actually mean?" All of a sudden, oil, part of the story again. Christopher Strategas framing out technically $80 a barrel on Brent crude. I would note no one looking above 80. That in itself is interesting. We've got much more. A Fed meeting at 1:30 this afternoon. Stay with us. Good morning.
With the First Word News, I'm Ritika Gupta. In Geneva, Joe Biden and Vladimir Putin have begun what could turn out to be 4 hours of meetings. Officials from both the U.S. and Russia are keeping expectations low in what has become an adversarial relationship. The two leaders will look to reach agreement on starting a new round of arms control talks. They also may take steps towards restoring diplomatic channels that were severed as relations plunged the last few years. Critics of U.S. technology giants are claiming victory. President Biden has named Lina Khan chairwoman of the Federal Trade Commission. Khan is one of the most prominent advocates of aggressive antitrust enforcement against big tech companies. Her appointment came hours after Senate confirmed her for a seat on the FTC. In Louisiana, a federal judge has blocked the Biden administration's temporary ban on new oil and gas leases on public lands and offshore waters. It's a victory for 13 Republican-led states that filed a legal challenge. The oil industry says that any long-term halt in leasing jeopardizes jobs and energy production. And the U.S. is pledging more money for poorer nations to cut emissions. U.S. climate envoy John Kerry says it's imperative to close the gap on finance when it comes to climate change. Kerry spoke in Saudi Arabia, where he is pushing major oil and gas producers to adopt cleaner energy policies. Kerry says the Saudis may agree to a net zero emissions target to take effect around 2050. Tom Gore's Platinum Equity has agreed to buy textbook publisher and edtech company McGraw-Hill for about $4.5 billion. McGraw-Hill is owned by funds managed by Apollo Global Manage. Bloomberg News reported in March that Apollo was exploring a sale of McGraw-Hill. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Get back to living in life. The state mandates that have proven right and correct and brought us through this pandemic are relaxed as of today, effective immediately.
Exceptionally important announcements there, not only in New York, but also in California. The governor of the state of New York, Mr. Cuomo, there with true celebration. And I think I can speak for all of us on Team Surveillance. We thank heartily the essential workers at Bloomberg LP for their care and affection through all this. It's really been a huge team effort. You just wouldn't, you know, I'm sure you've all lived it worldwide and across this nation. It gets right down to the basics, like getting coffee in the morning. Lisa Abramowitz off to the 9 a.m. hour, that important conversation with Howard Marks. Romaine Bostic is with me. And we're thrilled to greet the engineer Sean Donovan, who's engineering a New York City mayoral candidacy, looking for victory. And I haven't done this, Sean. I'm thrilled to have you on today because the most unusual vote of New York, where second or third is a viable alternative, all of a sudden it is upon us. Explain how your day is different each day, because maybe nobody's trying to be number one, but they're trying to be number two or even number three in this ranked voting.
Well, Tom, you're exactly right. This is a historic election because we're using ranked choice voting for the first time in New York City. And that means you have to be able to get more than 50% of New Yorkers supporting you all across this city. And what it means is, and we've seen this in other places around the country, that rather than the kind of political attacks we've seen, the mudslinging from the other candidates going into the final debate tonight, what really New Yorkers want at this moment is somebody that, instead of politics, is talking about plans. And that's, I think, the thing that separates me in this election. Is I bring real change from the status quo of the last 8 years. New York's been headed in the wrong direction, but I also bring deep experience in the moments of crisis that have hit our city. 9/11, Sandy, the Great Recession, all of those I helped to rebuild New York from. And now's a moment, you talked about the excitement of reopening, but it's as if we've just been hit by the hurricane. Now the hard work begins. We still have more than 500,000 New Yorkers out of work, and we need a mayor who really can lead the city forward and has the experience in these moments of crisis.
Sean, let's dovetail the reality of the ranked voting and maybe a move to a centrist dialogue with what's clearly become the theme, which is crime in the New York Police Department. How do you dovetail a centrist vote with the responsibility of all constituencies and the New York Police Department?
Tom, it's such an important question. And, you know, if we step back and think about the work we did under Mayor Bloomberg that really helped to make New York City the leading city in the world in so many areas, that rebuild growth in this city, it was really centered around the idea that in the modern economy, talent decides where to live and companies and capital follow. So quality of life, safe streets, clean streets, all of the things that make New York a good place to live are central to the economic success of the city. And so we need a mayor who really understands how to keep New York safe. Part of that is getting guns off the street, having a mayor who can work with President Biden, with other mayors and governors. I have those relationships. We could stop guns coming into our city. We also have to recognize, though, we're seeing a mental health epidemic playing out on our streets.
Yeah.
Homelessness has exploded. We're seeing people pushed on our subways, knife attacks, anti-Asian hate crimes, all connected to this epidemic of mental health. And that's work I've done for 30 years, is breaking that cycle, providing housing, getting folks off our streets, in addition to the work I've done on public safety and policing.
Right.
That we need to bring those together under the next mayor to help New York City start growing again and to put those more than 500,000 folks back to work.
Okay, and of course, in addition to safety here, Sean, a lot of folks are also looking at affordability, housing affordability. This is a tough city to live in for a lot of folks. You are basically a housing affordability nerd. You've spent a good portion of your career doing this here. What's the solution, though, for New York City? Because a lot of people have tried to address this before and have failed spectacularly.
Well, look, the first thing we need to do is help keep people in their homes. New York City was the hardest hit city in the world a year ago. We still have more than 500,000 hours. We're on the verge of the worst eviction crisis of our lifetimes. And instead of having a mayor who will demonize and divide us, go after the private sector, we need to bring billions of dollars of aid that's available right now, get it quickly to our renters, but also to our landlords to keep them afloat and make sure that we avoid that crisis. Second, we need a mayor who can work effectively between public sector and private sector to grow our economy and to create more housing. We have a desperate shortage of housing that is pushing up prices all across the city. And so what I would do is, just as I did when I was housing commissioner, work to make more housing affordable, to grow New York City, but also to make sure we're using all of our tools to create a lot more affordability. And one of those is home ownership. You know, we've learned that the best way to stop people being pushed out of their neighborhoods is give them a piece of the pie, help them own. And that's kind of the forgotten strategy in affordable housing in New York City the last 8 years. I would bring that back and make sure that we're creating wealth and growing opportunity in the city for affordable housing.
We're out of time, valuable time it has been. Sean Donovan, thank you so much, New York City mayoral candidate this morning. I guess, Romaine, with the gentleman in Geneva in the meeting in conference, we can launch over to a discussion of the Fed meeting.
Yeah.
You know, I sort of said, well, maybe it doesn't matter, but after listening to Brian Levitt, to listening to Jan Hatzius and others, there could be some value here.
Yeah, I think so, especially with the way that inflation expectations have shifted here over the past couple of weeks. I think getting a look at those economic projections and, of course, anything you can glean out of the words, out of Powell's mouth, out of the body language that he gives maybe to the audience there at 2:30, I think could maybe give this market a little bit more direction.
And again, the market data here is something. Remain on the equity markets as well. The fact is, everything considered, Fed meeting to Fed meeting, there's been a bid that wall of cash has to find and sustain a bull market.
Yeah, and we see that every month or so when this comes around here. You're going to see it today here. We are in a holding pattern right now with the S&P 500. Futures right now relatively unchanged on the day, as are most of the futures here. A little bit of dollar weakness, but, and again, I think a lot of talk will still be about what's going on in the commodity space, of course, with oil reasserting itself and base metals going in the opposite direction.
We will see. We'll continue our coverage here across radio and television. Please stay with us. An eventful day. And again, more news from Geneva. Jerome Powell, the press conference at 2:30. We begin our coverage at 1:30. Please stay with us. This is Bloomberg. Good morning.
surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Calm ahead of what could be a Fed storm. From New York City for our viewers worldwide, I'm Lisa Abramowitz in for Jonathan Farrow. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Let's begin with the big issue. Investors preparing for Chair Powell.
We're all looking at the Fed.
Fed decision clearly is the hot topic this week.
Communication is going to be very key. How they communicate what they might do in the future and when. What kind of hints Chair Powell throws at us.
How much does Chair Powell kind of manage the message?
It's going to be harder and harder to avoid talking about some form of tightening.
They're clearly preparing, massaging the market on the inflation.
We may be a little disappointed for more concrete expectations.
They're still looking at measures of unemployment.
Kind of more talk about the specifics. That probably comes later on this year.
Jackson Hole at the end of the summer.
Inflation expectations have peaked.
They're calling it transitory for now.
There's a bit of complacency, perhaps, by the Fed.
Powell is going to hold the bats until the end.
We'll have to wait and see.
Markets don't seem too worried. Yields slightly lower on the day. Michael McKee is tracking it all. He'll be asking a question today. What are you expecting, Mike?
Not a whole lot, but it's a fine line that Jay Powell has to walk. We just got some breaking news. The Fed meeting has resumed, as it should have. So we will have a decision this afternoon at 2 o'clock. And here's what we're going to be looking for. We talked yesterday about the dot plot. Today we're going to talk about the survey of economic projections, the summary of economic projections. These are what they limit at 4.5%. Both of those seem real where PCE is right now. 3.5% on that headline number, and the core is at 3.1%, already well above the Fed's targets. Now, they're thinking it's going to drop back, but how much do they adjust that 2.4% to take account of the fact that it went farther faster than they thought? And then finally, Lisa, we're going to be taking a look at the administered rates, which is the interest on excess reserves, really interest on reserves right now, and the repo rate. They sort of form a corridor for the effective Fed funds rate, and that corridor has seen a drop. The effective Fed funds rate now trading at just 6 basis points, but it has been trading at 6 basis points. The problem is so much money in the short end of the market that we are seeing the money market rates drop to zero and in some cases trade negative. So there's a feeling that the Fed might want to raise those two administered rates. It wouldn't be monetary policy, sort of a technical tweak, but it would get traders' attention, particularly if you're on the short rates desk.
Michael McKee, thank you so much. Don't forget to tune into our full coverage of the Fed's decision starting at 1:30 p.m. Eastern, ahead of those 2 p.m. headlines. Meanwhile, Mohamed El-Erian urging the Federal Reserve to ease its ultra-accommodative policy, or tighten policy, a risk up upending markets and the recovery. He writes, quote, unless the Fed signals in the next few months an acceleration of its reaction function, the risk would increase that this could end up being the calm before the storm instead of the solid foundation for the high, durable, inclusive, and sustainable growth that is needed. Joining us now, JP Morgan's Bob Michael and George Goncalves of MUFG. Bob, I have a sense that you agree with Mohamed El-Erian about the financial stability risk. How do you think markets will respond today if the Fed remains dovish and doesn't seem to be concerned about inflation that even they are starting to get more concerned about?
So, hi, Lisa. Look, here are the three things we want to hear from the Fed today. One, we want acknowledgement that substantial progress has been made on their dual mandate. Secondly, we want to see the summary of economic projections, that infamous dot plot, show a rate hike has been brought forward in 2023. And third, we want the rate on reverse repo raised. We're not likely to get any of that. We're going to go 0 for 3 on that because the Fed realizes that they're in the hottest point of the reopening recovery. They've used the word transitory. They can't back off of that. I think the markets will be very complacent about all of that. I think the shock would be if they did any of those three things.
So, George, what is the potential liability for the Federal Reserve if they do hold tight, if they do remain dovish, and people start to maybe get increasingly concerned about a policy error down the line, about raising rates more quickly down the line should inflation pick up more quickly?
Look, I'm with Bob that, it's not what we want the Fed to do, it's what the Fed's most likely going to do. And I agree that they're going to probably skip on all those 3 points. And this is really the last moment, I think, in the course of the year where they can do that. It's the mid-year point. We've gotten pretty far along with the vaccinations. Growth obviously has been strong, but I think most people are starting to come around to the idea of transitory inflation being a real thing. And the bond market definitely has kind of subscribed to that view, and that's been a view that I've had for a while as well. And I think that, it's a kind of an environment where it's like not too hot, not too cold, although we're seeing this backward-looking inflation data, look pretty scary, but on a forward-looking basis, we're probably going to start to decelerate, number one. Number two, the Fed is no longer operating to its forward outlook. It's an outcome-based type Fed. And so then you could argue, well, inflation's hot now. Shouldn't they be worried? In one way, yes, but I think that they're looking at both, let's see if this is sustainable and persistent. And over the course of the summer, it most likely won't be. And that gives them time to start to then think through how exactly to wean us off all this excess liquidity and get us back to an environment where they're still going to be accommodative. I think this idea that the Fed's going to go from 100 to 0 is the wrong way of looking at it. They're going to take a less linear approach. It's going to be much more modular, and they're going to modulate as we go forward. If the economy decelerates, then they could always do more easing. And I think we're going to hear all of that over the course of the summer get described to us on how they're going to taper and get us off all of this easy money.
Okay, so George, exactly to that point, this idea that the Federal Reserve is not going to just pull the rug out from under the market and end its $220 billion of bond buying every month and raise rates. The path there, though, I am really struggling with, Bob. The idea here that if this is the peak inflation, peak growth that we're looking at right now, if we do get slowing of the economy, how does the Fed stop buying any bonds, even as the U.S. issues more and more debt, without disrupting markets in a potentially very disruptive way to the economy? Bob, what's your view on that?
So, first of all, tapering is not about not buying any more bonds. It's about dialing down the purchases from $120 billion a month to something like $110 billion a month, then $100 billion a month, then 90, and so on. So there's still a lot of bond buying and balance sheet expansion going on. We learned from 2015 to 2018 that if it's done with enough warning and it's done patiently, that the markets can absorb it. And I think we're there. And a question for you, Lisa, is this the part of the program where we could get to submit a couple questions for Mike McKee to ask as he goes last in the batting order? Because there are two things he should be asking. One is, and I think George touched on this, the Fed has told us that the reaction function is not to react to forecasts, but to actual data. Well, guess what? The actual data is laser hot, and now they're telling us they're forecasting it's all transitory. Have they changed their reaction function? And secondly, on inflation, it's not only actual realized data that's way above any of their targets. It's inflation expectations that are becoming embedded. And it's not over the next year or two. When you look at one of their favorite measures, five-year forward inflation expectations, and 10-year tips break-evens, they're both at 2 3/8%. So the market is starting to believe that inflation will be embedded for the next 10 years. Are they comfortable with that?
Bob, your questions have been heard. Michael McKee did write them down, and I love how you ask, is this the part where we can, and then proceed to do? That's the kind of attitude I actually really like. George, do you want to weigh in? Do you want to give Mike some options for what to ask in his question at the very end when they save him for last?
Yeah, listen, if you're going to give me the opportunity, why not? I do think does asking the question around like the idea of a kind of multi-stage tapering, and could it be broken into pieces where we can have mortgages come off first, where we can see a change in how they're buying their treasuries, and really thinking about the composition of tapering, not just like linearly going down to no longer buying bonds, but actually being thoughtful around how they execute the taper is going to matter that much more than just the actual taper event itself. And would they ever decide on changing their buying of the front end, which is really what the money markets are clamoring for. Money markets want short-term paper, and the Fed is still buying it, and they're actually holding a lot of T-bills, which they could easily release back to the marketplace. And so thinking about the actual execution, implementation of the composition of tapering is really the big question for me.
Well, and to that point, and Bob, this is what I wanted to follow up with you on, because we were speaking with Michael Collins of PGIM earlier this morning on Bloomberg Surveillance, and he said he does think the Federal Reserve is going to go to zero before they hike